Rajinder sir, you can start now.
Okay. Thanks, Sanjay. Okay. Good morning, everyone. As insolvency professionals, we are often faced with complex challenges involving just a minute. Involving financial irregularities, undisclosed transactions, and potential frauds during the CIRP. In such situations, are critical tools that help us uncover the truth and protect the value of the corporate data in the forensic audit. A forensic audit goes beyond routine financial review. It involves a detailed and investigative examination of financial reports, transactions, digital trials, and corporate behavior, aimed at identifying fraud, misappropriation, and diversification of funds, or other violations of law. Under the IBC framework, forensic audits are particularly relevant in identifying preferential, undervalued, fraudulent, and extraordinary transactions under Section 43 to 51 and Section 66. The use of forensic audit has grown significantly with increased judicial scrutiny and stakeholder expectations. However, the process of initiating and managing of a forensic audit also brings its own set of questions and responsibilities, such as when should an IP consider recommending a forensic audit? What are the red flags that merit such an audit? Who can conduct it and how should they be appointed? What legal weight does the forensic audit report carry? How should the findings be used in CIRP or liquidation proceedings? They- these are not abstract concerns. They directly affect the resolution outcomes, recovery prospects, and even the personal accountability of the resolution professional or regulator. Courts, regulators, and guiders expected us to exercise professional judgment, maintain due process, and ensure with the independence of such investigative efforts. Today, we will explore the topic in detail. I have prepared a PPT that will help us understand the legal basis, procedural safeguards, and audit methods and judicial precedents related to forensic audit under the IIBC. So, let's begin today's session. Is this visible to everyone? Please confirm this is visible to everyone.
Yes, yes, yes.
Okay.
Yes, very much.
Okay. Actually, we will understand what do we understand by the forensic audit? Is this mandatory under IBC or not? When do we need forensic audit? Okay, if we need forensic audit as per under IBC, in what are the related sections? What are the related judgments? What will be the methodology? What will be the procedure? All these things we will cover in this PPT. First, we will understand why do we need forensic audit, because we are already companies already have a statutory audit, internal audit, sometimes as per business government transaction audit. Then why do we need forensic audit? Okay, first we understand what is the what is the means significance of forensic audit and why do we need? Is this mandatory or not? In today's increasingly complex financial and regulatory environment, the integrity and transparency of financial information are paramount. A forensic audit serves as a specialized examination. Okay. Forensic audit as a specialized examination conducted the precise legal awareness and investigating rigor to detect, analyze the document instance of fraud, financial misconduct, or non-compliance with the law of and regulations. For example, if there is if insolvency professional on the basis of preliminary or preliminary basis, if he found there are some fraud or financial misconduct, so then he can appoint a forensic auditor. The audit is undertaken with the objective of identifying anomalies, quantifying financial impact, and providing reliable and admissible evidence for us in legal or disciplinary proceedings. It integrates the disciplines of accounting, law, investigation, and auditing to protect the interests of stakeholders, uphold governance standards, and ensure accountability. The present forensic audit has been initiated in accordance with the applicable laws, regulations, professional standards, and is guided by principle of objectivity, confidentiality, and due diligence. Okay. Now, capable of forensic audit under IBC. Under the IBC code, a forensic audit is an essential investigative tool designed to detect fraudulent conduct, financial irregularities, and siphoning and or diversification of funds by the corporate debtor or its key personnel. It ensures transparency, accountability, and protection of creditors' interest during the insolvency resolution process and liquidation process. What is the objective? The objective of the forensic audit is to assist insolvency professional, committee of creditors, and the adjudicating authority in determining the presence of avoidable and fraudulent transactions and to facilitate appropriate legal actions under this code. Basically, insolvency professional have the right to appoint accountants, professionals. Okay, and he can, if as per business requirement, if there is a business requirement need to appoint a forensic auditor, so he can appoint the forensic auditor. But this is not a mandatory requirement, because as a 2 point registered value is a mandatory requirement, but forensic auditor appointment is not a mandatory requirement as under the IBC. If he thinks there is it appears there is a financial irregularity and there is some kind of diversification funds, and there is if he found and deduct there is fraudulent things in this business, so then he can appoint forensic auditor as per the business requirement if he required, because insolvency professional is also himself, he is also capable for to find out all those things. Introduction of forensic audit under IBC. The IBC was enacted to consolidate and amend the laws relating to reorganization and insolvency resolution of a corporate persons, partnership firms, and individuals in a time-bound manner. A key pillar of effective resolution of IBC, transparency and accountability to corporate debtors.
Yeah, 10 ਵਾਲੇ ਤੇਰੇ ਕੋ ਹੋਰ ਪਏ ਹੈ ਨਾ
Please,
ਉੱਥੇ ਹੀ ਰੱਖ ਸਕਣਾ
please mute.
Please mute the. Can you please mute the participant?
I'm sorry. I apologize. Sorry.
In this context, forensic audit has emerged as a crucial tool for detecting financial irregularities, identifying fraudulent conduct, and ensuring fair treatment of creditors. It involves the application of accounting, investigative, and auditing skills to examine the financial reports of the corporate debtor with the objective of identifying fraudulent transactions, mispresence, or misconduct by promoters, directors, or related parties. Okay. Now, forensic auditors are generally ordered by the COC, resolution professionals, or even by the adjudicating authority. If COC can also order, if COC think there is a need for investigation, if these transactions happen, means these transactions are normal or with means in a fraudulent manner, so then COC can also order to appoint a forensic audit and RP resolution professional, and NCLT. So these are the three main persons or categories who can appoint forensic auditor. Okay, based on the suspicion or of transactions that may be. Okay, when we think there's a means suspicion of transactions. Okay, so then we will suggest to appoint a forensic auditor. If there is no suspicion transaction actually happening in the view of resolution profession, then he will not go to appoint a forensic auditor. Okay, as per under the IBC, what are these are type of transactions? Preferential transactions which cover under section 43. Okay, and if there are transactions undervalued transaction under section 45, extortionate under as per section 50, defrauding creditors section 49, fraudulent or wrong trading section 69. So these are the sections. Based on the transaction, we will discuss further in detail. The findings from the forensic audit empower the stakeholder to file appropriate applications before NCLT for reversal of such transactions, fixing liability or wrongdoers and preserving the value of the corporate debtors estate. Okay. Now, definition of forensic audit as per under the IBC. A forensic audit under IBC refers to a specialized examination. Okay. See, when we go for a statutory auditor, that is based on the past events. Okay. If there is a transaction audit, so then we go for a specialized area for or specialized transaction for the audit. But in forensic audit, we go for a specialized examination. If there is a suspicious transaction happened, okay, and undervalued. So these are the related transactions for which we need forensic auditor. A forensic auditor under IBC refers to a specialized examination of the financial statements and reports of corporate data to detect and investigate instances of fraud, financial irregularities, misrepresentation, diversion of funds, or wrongful transactions. It is carried out using forensic accounting and investigate techniques to identify non-compliance with provision of IBC, particularly those related to fraudulent, preferential, undervalued, or extortionate transactions. It aims to assist the IP, COC, and the adjudicating authority in determining whether the affairs of the corporate debtors were carried out in a manner prejudicial to the interest of creditors or stakeholders. Now,
Sir, may I?
yes,
Sir, this you say that's just on the basis of suspicion. So suspicion is what? On what should be the ground for suspicion? Just I have the suspicion, I can ask for the forensic audit, or I have to take any kind of approval from the COC or from the adjudicating authorities. Just mere suspicion is not enough to ask for the audit. Or if we go for the I have suspicion and I go for the audit and nothing is found, then who will bear the cost for forensic audit? There should be some basis or some kind of criteria for undertaking such kind of audit, because it involves the cost, time, and everything. It is there.
so actually, in detail, we will cover everything.
Sir, I
Okay,
would
sir.
like to add something. If
But for example, if there is a transaction happened during the last within 1 or 2 years, okay, but as per market value, that transaction value was means more than this transaction. So on that basis, if insolvency professional feel ki this, for example, the asset value was say 2 crore, okay, but this transaction happened around 1 crore, and he feels ki there is something wrong, so then he can go for a further investigation. Then at this time we will be required forensic audit. We will cover all those things in further slides. I think it will.
Okay, sir.
We will discuss in last month. So your all the queries will cover in the further slides.
The slides are
Okay,
not
thank you.
moving, sir. Sir, slides are not moving on the screen.
No, just.
Sir, I would like to add something here, if you permit.
Yes.
Sir, in case of PUFE transactions or forensic audit, even if the IP is of the opinion, some of the transactions have not been done at ALP, that is at arm's length transaction. He may be of the opinion or he may not be of the opinion. Then also, in my opinion, the PUFE audit can be very well taken, can be conducted, is what my opinion here.
Just give me 1 minute. I'm unable to hear you. Just give me 1 minute.
Sir, we are unable to hear you.
Just give me 1 minute.
I guess Mr. Rajinder has left the meeting and he will be rejoining.
He's trying to rejoin.
Now is this visible to everyone?
Yes, sir.
Yes, sir. Yes, sir.
Can you tell me now it's moving? Slide moving?
Yeah, it's moving now.
Moving?
Yes, sir. Yeah, it's moving.
Okay. See, we have covered removal of forensic audit, introduction. So these are the transactions under IBC. Sometimes we have to go for forensic audit. For these, basically these are type of transaction preferential transaction audit, undervalued, extortionate credit transaction, fraudulent transaction, wrongful trading, or fraudulent trading. Okay. So now, if a resolution professional, resolution professional will check, is there any related party transactions happened before CIRP within 1 or 2 years? If he found these transactions happen with the related party or with corporate debtor, these are the preferential transactions. Okay. So then he will see whether this is as per the normal, these are the normal transactions, or these are the preferential transactions, or these are undervalued transactions. And if these transactions are intention was fraud on the fraudulent manner, so then he will have to go for further investigation. Okay. So then he will use his professional judgment. If, if he finds that these transactions are normal transactions as per the market means uh, based transactions, then there is no problem. For example, if there is a related party transaction, if any corporate debtor bought any asset from the company, the market value was say 2 crore, and he bought that asset from the company say in 1 crore or 1 crore 50 lakh. So these are the undervalued transactions, and these are the professional transactions. So for these type of transaction, he will have to go for further investigation. Okay. Professional transactions audit as per section 43-44 to detect transactions made to prefer one creditor over others prior to insolvency. What are the undervalued transactions? To identify transactions where assets are sold, transferred at an unreasonable at low value. Okay. Market, for example, if market value was more than that transaction, so that means that transaction happened as will cover as an undervalued transaction. Now, extortion credit transaction audit to examine unfair or extortionate credit transaction imposed on the corporate debtor. If another fraudulent transaction audit to detect transactions done with the intent to defraud creditors. Wrongful trading to identify persons, director partners who continue to trade dishonestly or fraudulently. So these are the transaction-based classification linked to the IBC provisions. Now, definition of forensic audit under IBC. So these transactions mainly cover relevant sections. There are so many relevant transactions. Section 43, preferential transactions, deals favoring one creditor or related party over others, impacting equitable distribution. Okay. Means actually we were in at that time, we were in the situation to have transaction with another creditors also, but we have given priority to one of the creditor, okay, or related party. That is not the problem, but if we have also done that transaction on not on the basis of the market, so then there is a problem. Okay, in that situation, company lose the money. Section 44, Order in respect of preferential transactions provides for NCLT's power to reverse, okay, such transactions and restore the position. Okay, if and means insolvency situation as COC found that preferential transaction happened before CIRP within 1 or 2 years, so then he can make an application to NCLT, and NCLT has the power to reverse such transaction and restore the position. Section 45, undervalued transactions, cover transactions where assets are transferred for significantly less consideration. So then under section 47, application by resolution professionals for undervalued transactions, mandate action by RP in case of undervalued transactions. Okay. So these are the related relevant sections under IBC which are linked to the forensic audit, because these transaction needs further or more investigation whether these transactions happened or not happened. If any resolution professional find that there is no transaction happened before CRP, so then these all these actions will not means attract. So then there is no question to appoint forensic audit and go for further examination. If he found some transactions happened before CRP, 1 year or within 2 years before CRP, so then if he suspect, and on what basis he can suspect? He can suspect on the basis of documents, on the basis of records. Okay, so if that transaction was normal transaction, then there was no problem. But for example, if all the procedures as per law was happened for these transactions, so these transactions are normal transactions, so then there is no issue. Section 48, order in respect of undervalued transaction, details the remedies that NCLT may grant. Section 49, transaction defrauding creditors, target transactions made with the intent to defraud creditors. Section 50, extortion credit transaction deal with the terms of credit that are unconsiderable or grossly unfair to the corporate debtor. Section 41, order in respect of extortion credit transactions provide the adjudicator authority power to annul such transactions. Section 66, fraudulent trading or wrongful trading imposes liability on persons, director, okay, who conducted business with intent to defraud creditors or for fraudulent purpose. Okay, we can also definition of these transactions can also be classified in these categories: preventive forensic audit, curative forensic audit, targeted, yes, or special audit, or comprehensive audit. Okay. Preventive forensic audit conducted proactively during CIRP to prevent approval of a fraudulent resolution plan or sale. Okay. And it forensic audit also be for the purpose of curative, means carried out after detection of red flags or to establish culpability and take legal action. Okay. Target special audit focuses on specific transactions, related party dealings, or particular time periods. Comprehensive audit cover a wide scope, including all financial and operational records during the look back period, that is 2 years or 1 year, as per the section 43 and 45. Okay. These classifications are structured approach to forensic audit under IBC enables stakeholders to identify misuse of power and resources, strengthen legal proceedings, and maximize recovery for creditors by tracing and reversing illegitimate transactions. It is an essential part of the resolution and liquidation ecosystem under IBC. When CRP is going, okay, so the main objective of the resolution professional is to maximize the corporate debtors' wealth. So if he found, he will also means verify the transactions happened before CRP as per section 43 or 45. He will also look back the period 2 year or 1 year. If these are the transactions happened, if these transactions was abnormal or this transaction was not normal, so then he will go for further examination and take means action as per the as per the your under IBC code. Means whatever will be the action, so then he can make an application to NCLT. Then these transactions will be restored. Okay, so if there was a these transactions are not normal transactions. Okay. Now, significance of forensic audit. Forensic auditor is a specialized examination of a company's financial reports with the objective of detecting fraud, misstatements, embezzlement, and regulatory non-compliance, unlike traditional audits. that focus on accuracy and fair presentation of financial statements. Forensic audit are investigative in nature, okay, often intended to serve as a evidence in legal proceeding or regulatory actions. So what are the steps or taken in the forensic audit? First, detect and prevail fraud. Okay, first, we will detect.
Sir, screen not moving. It is still showing preamble.
I don't know what is happening. Now moving.
Yes, sir.
Okay. See, how do we find out we need forensic auditor or not? Okay, first, a forensic audit is specialized examination of a company's financial reports with the objective of detecting fraud. Okay, first we will detect is there any fraud happened or not? Okay, and also we will make sure how to prevent fraud like misappropriation, falsification of accounts, provide legal evidence for courts, NCLT or regulatory actions. Okay, in case NCLT, as per the section of NCLT, if means adjudicating authority find and someone make a complaint for these type of transactions, to then NCLT or adjudicating authority can also make an order to appoint a forensic audit for these particular transactions. Crucial under IBC to identify.
Sir, may I? Sir, I was asking the same thing in the beginning itself. Here it say, okay, he has to investigate, see the evidence, thereafter detect, and then provide legal evidence. So for that, for all that, he has to establish, he has to examine, and then submit to the NCLT. So before that, to identify is it fraud or not? Okay, transaction maybe that okay, it was shown as a 1 crore, whereas the value was 10 crore or 20 crore. That's very easy. But finding whether it was fraudulent or not, it takes time. It takes evidence. For that, he will take the time, and that too with legal evidence he has to provide to NCLT or the regulatory action. NCLT or regulatory action. This will be NCLT for regulatory action. So when he has to provide legal action, legal evidence, so he has to do everything, and after that only he will go for the audit. So my question was, forensic audit at what stage, and what should be the concrete this thing parameter or kind of the guidelines or something that okay, now these parameters are met, these things are okay, and go for the forensic audit, because forensic audit is generally very at very critical level, and this shows that something fraudulent has already happened.
But actually, see,
We cannot make just the suspicion, doubt. So that can be subjective also.
but that is subjective also. I fully agree with you. But if first of all, you will detect these means in last 2 years, these type of transaction happened or not happened. Your first step will be this. If these transaction happened, okay, so then if you means if there is a all the means related documents is there, and if you have the sufficient proof or evidence that these were the normal transactions, because for example, on the 31st March, okay, I made one payment to Kitus, okay, means for foreign Kitus. What was the currency rate? If currency rate was 82 rupees, okay, but I have taken currency rate 60 rupees. Okay, so then there is a problem. So means on the basis of professional judgment, first you will see whether this transaction is normal or not normal on the basis of professional judgment. I'm talking about the means insolvency professional or another area. For example, if any other means concerned person make an direct application to the NCLT कि these transaction happened with means wrong transaction happened. So in that case, educating authority will come into the picture. Okay, because we are not sure कि whether this transaction was okay or not. If we have a sufficient base कि we need to go for a further investigation, so then we will go for a forensic audit. It will take time, but when you are going for a CIRP, you also appoint another professional. So in the same manner, if you found that something is happened wrong, if you think on the basis of records, okay, on the basis of evidence, so then you will have to go for a forensic audit. But majorly it depends on your professional judgment on the basis of the available records, details, documents, evidence. On the basis of all those things, you will decide ki whether these, because in the IBC you have the time, because you have to find out these type of, these are the means transactions means happened or not happened. On the basis of, you have to inform to the adjudicating authority. Just hold on, just hold on. Got it or not? Hello?
Still not, sir, because finally it comes the professional judgment. You, on the basis of professional judgment, one has to form the opinion it happened or not. If it not happened, fine. If it happened, then he can go for forensic audit. But what kind, unless there are the legal evidence to gather the legal evidence, we need the, we cannot simply say that okay, we go for the this kind of audit. No, because just based on the based of this professional judgment is a subjective judgment. There should be either proper guidelines or some kind of case laws or some kind of something. But there should be some basis. Okay, these are parameters are met and we can go for it.
Okay, I will tell you. I will give another example. For example, in statutory auditor, what we do, we check all the means detail, all the procedures means adopted or not. We will check whether approval was there or not. But in forensic audit, if corporate data says I have not approved that this thing, so for example, if I am saying I have not given the approval, so then so there is a challenge whether I have signed or not signed. Then I will have to hire that handwriting expert. Okay, so then that means that is the further investigation. In statutory auditor, we don't means go for a professional who will confirm means as a handwriting expert whether that person signed or not. So these are the things come in the forensic audit. In statutory audit, we do normal audit. But in forensic audit, if there is a problem, if there is a question, if there is a means a complaint, if these are the type of transactions happened, so we will have to go for critical examine, and critical examine done by the forensic auditor, not by the normal auditor. We will cover in all those things in further slides. We will discuss. If you have any query, we will also discuss. We will also discuss the related landmark cases also in the further slides.
Okay, sir. Thank you.
Okay. Supports banks and RBI norms for red flagged accounts and fraud classification, strengthen corporate governance and stakeholder confidence, ensure compliance with Companies Act, PMLA, RBI, SEBI, and KYC, and AML rules acts as a deterrent against financial mismanagement and misconduct. Okay, significance of forensic audit. Forensic audit initiates the systematic and independent examination of a company's books of accounts, statutory reports, financial documents, and vouchers with the primary objective of the detecting fraud or the possibility of fraud. Okay. Okay. For example, if we have a these are the suspicious transactions. So then, in that case, forensic audit will help us to do systematic and independent examination of company's books or these transactions. The primary objective of to detecting fraud or possibility of fraud. Okay. Unlike conventional audits, forensic audit go beyond financial reports. They involve extensive field work, interviews, and collection of information on multiple stakeholders such as employee, vendor, customers, and related parties. The aim is to identify, trace, and corroborate evidence of misconduct or financial irregularities. Forensic audits are often conducted to support legal proceedings involving fraud, embezzlement, diversion of funds, or other financial crimes. They are particularly valuable in litigation, dispute resolution, insolvency cases, and regulatory investigations. Okay. If resolution professional COC and NCLT have a opinion, and if there are suspicious transactions, if they found, okay, so then they will appoint foreign auditor. Forensic auditor will find out and do independent examinations whether these fraud happened or not happened. They will detect that fraud happened or not happened. If fraud happens, so then he will find out and submit the report accordingly. Now, forensic auditor is expected to possess not only advanced accounting and auditing skills, but also specialized knowledge of legal framework governing fraud and corporate misconduct, rules of evidence and admissibility in a court, investigation techniques, including digital forensic, data analytics, and behavior red flags. Okay. Okay. Now, if I am working as a resident professional, so if I can also take report from the system, I'm just giving you an example. Is there any changes happened? If someone has changed the transactions, number one, if these transactions was some entries are deleted from the system, so if means there was a abnormal behavior in this period, means sale was going like this, and now sale was happened this period this. So if purchase were normal purchase was this, so means if there is irregularity on that basis, we can means go for further examination. What are the limitations of forensic audit? Lacks forensic science scope. Forensic audit are primarily financial in nature and don't cover scientific verification such as a signature authentication, handwriting analysis, or stamp verification, which requires separate forensic experts. Possibility of diversion investigations may lead auditors into unexpected or unrelated directions, diverting focus from the original objective. Time constraints. Forensic auditors time intensive but are often expected to be completed within limited timelines, which may compromise depth of accuracy. Non-cooperation from management, lack of support or active resistance from the company can resist access to key data, document, and personnel, hampering the audit process. Incomplete or missing historical records, especially in poorly maintained system, can limit the effectiveness of the audit. Post-intensive process, depending on the scope and complexity, forensic audit can be financial burdensome, particularly for small or distressed entries. High post-audit responsibility. Finding of forensic audit may be used in legal or regulatory proceedings, placing significant responsibility and legal risk on the auditors for accuracy, objectivity, and professional integrity. These are the limitations of the forensic audit, because when we hire forensic auditor, okay, if we want to go for further examination, okay, and we also, for example, and don't cover sensitive verification. So we don't in this scope, we don't hire signature authentication. So these are the limitations. Now, laws assuming importance of forensic audit, key legal provisions relating to forensic audit in India. Forensic auditing is a highly specialized area involving examination of financial reports with the objective of uncovering fraud, misrepresentation, or financial misconduct. Various Indian laws and regulations provide the legal foundation and applicability of forensic audits. The following provisions are particularly relevant. Section 477A Indian Penal Code, falsification of accounts. Section 477A the IPC criminalize the act of falsifying accounts, reports, or documents with the intent to defraud. In the contents of forensic audit, the provision is often invoked when auditor identify deliberate manipulation or fabrication of books of accounts by employees, officer, or management. Okay. Forensic audit must exercise caution when using the terms falsification or misrepresentation in their report, as such terminology carries serious legal implications. Findings should be presented objectively, supported by verifiable evidence, and worded precisely to avoid prejudicial interference unless intent and impact are clearly established. The section defines fraud comprehensively to include any act, omission, concealment, or about a position commitment with an intent to deceive, gain undue advantage, or injure the interest of the company, its shareholder, or creditors. Okay. Now coming to section 66 IBC code, fraudulent or wrong full trading. As per section 66, IBC allows a residential professional to apply to the adjudicating authority if during the CRP it is found that the business of the corporate debtor was carried out on with the intent to defraud creditors or for the fraudulent purpose. This section imposes personal liability on directors or other persons responsible for such misconduct. Forensic audits conducted during CRP often provides the basis of initiating forensic audit conducted during CRP often provide the basis of initiating such actions and form the evidentiary foundation of for the RP's application. Okay. There is another provision, RBI Master Directions on Fraud. RBI circular mandates forensic audit in case their banks suspect fraud in accounts classification for as non-performing assets, especially when the outstanding exposure is more than 50 crore and above. Key directions include every detection and reporting of fraud by banks, engagement of third-party forensic auditor to examine the borrower's conduct, declaration of accounts as a fraudulent based on the forensic audit findings. The financial sector in India has gone significantly regulatory transformation aimed at improving transparency, accountability, and risk management. A key development in this section was the RBI circular issued in May 2015, which mandated banks to deploy forensic audits as both preventive and investigative tools to detect and address financial irregularities. The directive specially targeted red flag accounts of corporate borrowers with an exposure of 50 crore and above. Forensic audit in such case are used to identify potential fraud, diversification of funds, or misrepresentation of financial reporting. Under IBC Code Section 29, this provision disqualify willful defaulters and other ineligible entities from submitting resolution plans during insolvency proceedings. Forensic audit assists in determining whether promoters or related parties fall within the scope of disqualification. We also go for KYC, anti-money laundering guidelines. There was another circular issued by RBI, Master Direction on Fraud Risk Management on July 24. RBI released consolidated Master Direction on Fraud Risk Management for commercial or cooperative banks, NBC, who have assets more than 500 crore, and HFC. Okay. Okay, why this matters for forensic auditors? Proactive fraud governance, new rules embedded early fraud detection and real-time monitoring into audit mandate. procedural fairness, mandatory show cause notice, expand scope. Investigation must cover both credit and non-credit transactions. Forensic audit as a standard procedure. Audits are now a critical, institutionally embedded component of RFA handling and fraud classification. Okay, now coming to what are the role of forensic audit? This is very important and crucial. Detection and investigation of fraud. Forensic auditors are fundamentally investigative and go for beyond traditional audits. They are designed to uncover deliberate misconduct such as classification of financial statements to mislead stakeholders or inflate valuations, embezzlement or misappropriation of company's assets such as siphoning funds to personal accounts or dummy entities, payroll fraud, including fake employees or inflated compensation, shell company arrangement to hide ownership or launder money. So these are the things which forensic auditor detects and investigate whether these wrong things happened or not happened. Forensic auditor first detect and then go for further investigation. For example, if company shown means X amount as a salary, okay, but company don't means without appointing persons, okay, and transfer money in other person's account and shown as a personal means salary expenses. This also fraud. So these are type of frauds are investigated in forensic audit. Means, is there any misappropriation of funds was there or not? And another one is another role of forensic audit is legal evidence and litigation support. A key role of forensic audit is to produce findings that are admissible in legal proceedings, including criminal prosecution under the IPC code 420 or 477 and 406, civil suits where forensic audit reports are used to support claims of financial loss of damages, NCLT proceedings for above transaction which we discussed, regulatory proceedings including SEBI, RBI, ED or CBI. The audit must be conducted in a forensically sound manner, ensuring chain of custody, objectivity, and evidence integrity. But there is another role of forensic auditor, strengthening corporate governance. Forensic audit contributes significantly to transparent and accountable management practices. This role includes exposing conflict of interest transactions. If there was a conflict of interest transaction happened insider dealing and with related parties misuse, so then he will mention in the report revealing intentionally violations of a broad approved policies, ensuring that company officials uphold their fiduciary responsibilities towards shareholder and creditors. When misconduct is found at senior management or board level, forensic audit provides the documented basis for disciplinary actions, policy amendments, and structured reforms. They can also restore investor confidence by demonstrating due diligence and commitment to ethical practices. Another role of forensic auditor is ensuring regulatory compliance. India's evolving financial and corporate regulatory landscape mandates strict compliance with various legal provisions, including Section 143(12) of Companies Act. Statutory auditor must report fraud above prescribed threshold to the central government. Section 447 RBI guidelines, if there is exposure more than 50 crore, PMLA, forensic audit support money laundering investigation through tracing of funds, layering of transactions, identification of beneficial owners as per SEBI regulations, where companies are found to have misrepresented facts in IPO or annual filing or forensic audit assists in determining the extent of wrongdoing. So these audit helps organizations meet their statutory duties, reduce penalties, and provide a framework for corrective action. Okay. Forensic auditor also support resolution professional during CIRP and liquidation. Okay. In insolvency professional, in insolvency cases, forensic audit is indispensable for identifying questionable pre-CRP transactions such as preferential transaction, undervaluation, extortionate transaction, fraudulent transaction. Such findings allow the resolution professional to file application for reversal, recover value, and hold promoter director personally liable. These also guide the COC in evaluating viability and voting for resolution plan. Okay. Tracing and recovery of assets. Forensic auditors are instrumental in following up the money trail, especially in case of fraud, diversification, or concealment. This includes reconstructing the flow of funds through multiple bank accounts, intercompany loans, or fictitious vendors, identifying assets held in Benami names or routed through shell companies, collaborating with enforcement agencies, and using international treaties, FTA, CA, CRC, GTTA to locate assets in offshore jurisdictions. Okay, supporting recovery actions like attachment of property, filing of claims in CIRP or liquidation, and adding in prosecution of defaulters. Such assets raising exercises enhance the recovery prospects for creditors, investors, and the government. Okay. Sometimes, if any wrong thing is happening, but means if director means transfer the money in a bank account and in another bank account in the name of Benami or in this shell company, okay, to the purpose of defraud the company, okay, so yeah, then forensic auditor will trace this money trail, okay, examine critically. If found, so then the recovery of the assets will be done. Risk mitigants and deterrence. Forensic audit also have a preventive value. They highlight internal control failures and operational loopholes that may be exploited in the future. Organizations can use forensic findings to strengthen internal policies. Okay, if something is happened wrong, so then company need to means uh, make internal strengthen internal policy. If there is a loophole is there, so then there is a chance of fraud. Install whistleblower mechanism or enhance digital monitoring. Okay. The possibility of forensic security act as a deterrent against unethical behavior, especially among promoters, directors, or financial persons. Lenders and investors often use forensic audit reports for due diligence, particularly before funding acquisition or restructuring. The role of forensic audit spans across investigation, preventive, legal, regulatory, and governance functions. It is not just a reactive measures post fraud, okay, but also a proactive mechanism that strengthens financial disciplines, ensure legal compliance, and protects shareholder interests. Okay, company should make policies, strengthen policies, so that there should not be any chance of any misappropriation of funds. Okay, and company will also use the whistleblower policies. Okay, if anyone found, any person or any employee or any related person can also complain to the complain in the company, so company can avoid for this type of misappropriation of funds or something, some these wrong transactions. Scope of forensic audit. What are the type of engagement is taken by the forensic auditor? Fraud audits conducted to detect if there was a fraud happened, if suspicious transaction happened, if there is a means any related party or any concerned person or concerned authority made an application to the adjudicating authority and adjudicating authority for COC and resolution professional want to know whether this fraud happened or not happened, and if there is a need to go for further examination, so then forensic auditor will come into the picture. And what will be the type of engagements? Fraud audits conducted to detect and investigating fraud, such as the misappropriation of assets, false billing or vendor fraud, payroll fraud or ghost employees, inventory theft and revenue scheming. Okay, often triggered by whistleblower complaints, management suspicious or internal control failure techniques, including data analytical, tracing transactions, and interviewing employees. Okay. So means company, means COC, licensed professional, and NCLT can or will hire forensic audit for the purpose of fraud audit. Okay, in this forensic auditor will detect and investigate that fraud happened. If fraud happened, so then he will examine all these things in detail. Okay, and what type of area he will cover in this fraud audit? Is there any misappropriation of assets of funds happened or not happened? In case if false billing done to vendor, okay, what happened if false billing or vendor fraud happened, so then what will happen? We have not purchased material, but we have booked the expenses and we will make the payment to the vendor. So that what it means, that is the loss to the company. So that is the fraud, because ultimately that person whosoever done this thing, means employee or corporate debtor. Okay, so that was done for the intention of the fraud, means for the purpose of fraud. Okay, for example, if we have shown if we have paid 10 crore, 5 crore, means X amount as a salary, but actually salary not paid. So then what will happen? If I'm a corporate debtor, if I have shown there are 10 employees working in 5 employees working here in Mumbai, 2 in Chandigarh, in this place. So and will that corporate debtor or that person means transfer that amount to in another person or in his account. Okay, showing that are the means payroll expenses. So that is also covered under the fraud, inventory theft and revenue scheming. Okay, so if there is a revenue means inventory theft happened. Okay, so these are the comes into the in the purview of the fraud. So then in this case, okay, who can trigger? If we have a whistleblower policy, so then any employee can complain. Okay, so then management will know, so management will take action accordingly. If any management person we know or have a means suspicious, so he can also means make a complaint. If there is an internal control failure, if we have a policy, okay, and if someone overruled this policy, okay, so in all these matters, company's fund will be misused. Okay, so for this purpose, we need to hire the forensic auditor. Scope of forensic auditor. For example, if company is under CRP, okay, if I will also check why this company means what happened with the company, what was the reason the company had to go for CRP. So we will also see these things. I will compare my financial with another previous financial year. So I will see what happened with company where we have lost money. So in that area, we will also check and verify as a resolution professional. If I found something wrong, so then I will have to take further steps accordingly. Now, the another scope of forensic audit is financial statement audits. Focus on identifying international misstatements in financial reports evaluation, manipulation of earnings. Okay. Misrepresentation of revenue or expenses of balance sheet liabilities may involve re-performance of accounting calculations, comparative ratio analysis, and assessment of accounting policy. Okay. See, if I have shown and I have done manipulation in earnings, maybe I have shown more earning. Okay. How can I show more earning? I can means shown invoicing on higher side. Okay. And also, for example, if I have booked a purchase, okay. So in this way, if there is manipulation done due to this company lose the money. Okay. So these are the areas where forensic auditor come into the picture. Okay. When transition professional analyze, how he will analyze? Dash insolvency professional analyze on the basis of the previous financial years, and also he will also check means do the ratio analysis with another competitive companies with industries. Okay, on that basis we can find out what was the reason for, for this company shown the loss, and on why this company had to go to this ERP. When we will analyze with our competitors with industry standards, we can come to know the reason. Okay, what wrong step was taken by the management? Okay, what was the issue? So we can find out the reason. Accordingly, we will take action. Corruption investigation unethical and illegal behavior such as bribery and kickbacks, conflict of interest, illegal gratitudes, extortion or collusion, involve forensic review of procurement reports, contract approvals, and employee communications. Okay. Now, cyber fraud investigation focuses on digital or technological driven frauds, unauthorized access to financial systems, phishing, ransomware, or email compromise, theft of sensitive financial or personal data. Requires collaboration with IT forensic experts, analysis of system logs, IP records, and digital footprints. So now, fifth one is insurance claim investigation. If someone submits their insurance claim, so insurance agency will also go for forensic audit. May we can go aimed at verifying the legitimacy of insurance claims. On what basis they will go, do forensic audit? Supporting documentation, invoices, reports, claim consistency with policy terms, possible acceleration or falsification of events common in property, fire, health, and business interruption claims. Okay. If these things happen, so then insurance agencies, insurance company also appoint forensic audit to ensure that everything was okay and everything was in the normal uh, transaction. Okay. So there is no fraud and there is no manipulation. So that company will need to ensure before means paying insurance claim or as per policy. Now, what type of industries covered in forensic audit? So we can segregate corporate sector, trading, logistics, retail, banking and financial services, governing and public sector undertakings. Okay, and non-profit organizations, legal and professional services. So these are the industries we can cover under the forensic audit. Okay, now third part come under the scope of forensic audit reporting. Okay, so detailed reporting, report on findings, will be done by the forensic auditor include executive summary, what was the scope, and what was the objective, what was the methodology adopted by the forensic audit to find out or to detect the fraud and the investigation done, detailed factual findings. Okay, what was the financial finding, supporting documentation, email, contracts, transactions, flow chart of data visualizations. So these are the line items will be considered under the detailed reports on finding. Number two, when he he will prepare that report, he will also give recommendation so that in future these things should not happen. So he will also recommend on the basis of the detailed reports, propose actions, plug control gaps. What were the control gaps? Okay, mitigate future fraud risk, improve internal process, strengthen whistleblower and grievance mechanism. Okay, means their company should have the whistleblower policy, okay, and proper whistleblower system, so that management can know in advance if something is happening in wrong in the company. So then any concerned person, any employee can approach to the management as per whistleblower policy, and also there should be a strong grievance mechanism. It should not happen if someone is complaining and if there is no strong grievance mechanism, then the purpose will be defeated. Expert witness testimony. Forensic auditor may required to testify in courts and CLT witness present and explain audit findings clearly with stand cross examination on methodology and conclusions. Okay. Collaborations. Okay. Collaborations will be with law enforcement agencies, internal and external legal counsel, regulatory and compliance authorities. Okay, now regulatory and ethical standards, accounting standard, auditing standards, ethical guidelines. Under the regulatory and ethical standards, under the scope of audit, so these areas will be covered. Now, just a minute. So, law and regulation interface with forensic audit. There are so many laws are interface with forensic audit. Companies Act, in case of reporting of fraud, RPT, mismanagement and financial misstatement. Under IBC, Income Tax Act, GST law, Indian Penal Code, Prevention of Corruption Act, Prevention of Money Laundering, Information Technology Act. So, SABI, FEMA. So, these are the law and regulations which are interfaced with the forensic audit. Okay. Specific areas of investigation in forensic audit. We have almost covered in financial statement fraud, Companies Act, Section 129, 134, 447, mismanagement of funds, IPC 403, 406, 420, PMLA Act, Loan and Credit Irregularities, IBC 66 and 68. These are the RBI guidelines. Related party transaction, Companies Act, SEBI. Okay. In case of manipulation in CRP or liquidation, as per Section 43, 45, 40, these are the transactions. If there was some manipulation done by the corporate data or by any other person, so then appropriate action are to be taken. GST, Income Tax Authority, cyber frauds and data tampering, information technology. Unauthorized fund transfer and system manipulation, hacking. So these are the specific area of investigation in forensic audit. in case of corruption and bribery, non-compliance with corporate governance, physical and fixed assets misuse. Okay. For example, ghost assets or assets shown but not found on inspection. For example, the company have assets, and if corporate data using in their personal use, or and if that assets are not available with the company. Okay, so these are the assets we are shown in the books, but actually these assets are not means available. Okay. And also undervalued or overvalued assets disclosure, discrepancy in stock and inventory reports. So these are the means physical and fixed assets misuse as per Companies Act. Okay, this also covers under the area of investigation in forensic audit, and this is also part and parcel of the means IBC code. For example, when I am working as a insolvency professional, I will also ensure ki whether all the assets as per all the assets are as per reports are means available or not. If not, then my first priority will be this key to take all the assets in custody. Okay. Otherwise, my first step will be to means take back all the assets as per company reports. If some assets are with corporate debtor, so then I will have to take it back, and I will have to take appropriate action as an insolvency professional. Okay, so this is very critical. Means this is main very critical and crucial area of investigation. Okay. If someone asks me how will you come to know whether when we should take step, when I am working as an insolvency professional, I will definitely go through all the detail and documents available to me. As these reports, all the things are available now. So see, this is the critical. For example, if I have shown key inventory is showing in books for 5 crore, okay, but when insolvency professional go and visit, okay, and verify, so then he means don't find those assets or those inventory, so then that is the area of investigation. So in that case, what will happen? He will go through all the details and documents when inventory came, when in or out, what should be the balance, and why that balance is not matching. Okay, if not matching, so then he will take appropriate action. Okay, so sometimes we means sometimes most of the times we can find out the laboratory from the company reports itself. Okay, and when we will do analyze, means comparative analyze. Okay, and we will also check physically. So then we come to know, we can easily come to know something is wrong in this. Okay, and also we can also take help. Means if we have a whistleblower policy, so we can also have means check the reports whether any related party or any other employee or any concerned person have raised that means this issue. Okay, and this issue was resolved or not. So we can also check with these things with these reports. If some transaction happened, if these transactions will happen as per company policy or not. If company policy is if I am to sell any asset, and as per the company policy, I have to take at least 3 quotations. Okay, but I have not taken 3 quotations from different vendors. Okay, so then then there is a problem. That means that means something was wrong happened. Okay, for example, if before CRP, okay, I sold X asset. As per company policy, there was a requirement to take 3 quotations from different vendors. I will check whether 3 quotations were taken or not taken, whether these quotations are okay, if that these quotations were not means like furgy or on the basis of fraud. So I will check whether these companies are or these entities are there or not, they have submitted that quotation or not. I will check and verify these reports. If I found that these were these things were happened, so then I will ensure that this transaction was local. If I found that company is not there, Okay, and if that company is there but not submitted quotation by the companies, okay, but as per my report showing the quotation was submitted by these companies, so then there is a means base of suspicious transactions. So then I will take appropriate action accordingly. Another area, payroll and employee fraud, fake employee and ghost salary, inflated claims, CAD incentive, conflict of interest in hiring relatives. Okay, because if company is having policy, the company will not hire. Means related or in blood relation. Okay, if company will hire, so then declaration will be taken from that prospective employee. So these are the things happened as a policy or not, need to take care. Legal and contractual breaches. Okay, for example, if I have a contractual agreement or any agreement with any other company, so these transactions happen with means we as per this contract or this agreement or this MOUs happened or not happened. So these are the areas of investigation in forensic audit. Okay, most of the things if you will find, see here, as per IBC code, we need to take care this thing. Okay, and see, this is also related to the IBC code, directly or indirectly. For example, if there is a fake invoicing, so then what will happen? In current scenario, practically it's not possible now to take input tax credit for. But if I will talk about the earlier, okay, if there was a fake invoicing done, okay, my intention was to take input tax credit, okay, non-reporting of income or circular transactions, non-disclosure in regulatory filings. So these are also comes in the preview of fraud. Okay, because we company hided income or tried tried to take the benefit of the income, means for as the income tax input tax credit, or if I have not reported income, so then I not paid the tax part to the government authorities. Okay, so these are the things also means covered under the investigation, because these are the wrong things also need to examine further in a forensic audit. Okay, in cyber frauds. Okay, for example, if there are two persons who can approve the payment, A and B. Okay, A is initiator and B is approver. Okay, if instead of B given their right to the C, that is also against the company policy. Nobody can give their right login ID password to another party as per company policy. Okay, or if C person without means C person approve that payment on behalf of B. Okay, using using his login ID and password. Okay, without knowing B person, that is also coming to the fraud. Okay, so these are the areas where investigation is required for the and forensic auditor come into the picture. Okay. Okay, now what will be the process? What will be the forensic audit process if we hired forensic auditor? Okay, so what type of process will be adopted by the forensic auditor? First step, he will take planning and preliminary assessment, key activities and explanations, understand the complaint or suspicion. Okay. First, understand the complaint or suspicion, assess why the audit is being conducted. That is whistleblower complaint or fraud detection. Okay. define objectivity and scope. What areas will be covered? Okay, vendor payment, fixed asset, payroll. Okay, because when insolvency professional is going to hire forensic auditor, so he also know very well कि in which area he needs forensic auditor's help. Okay, for example, if there was a whistleblower complaint was there, okay, if he found these transactions were not happened as per the company policy, as per note the rule and regulations, and these transactions as per IBC code, he need to verify before CRP if these transactions happened within 1 or 2 years. Okay, if these were not as per company policy, which I have already discussed, for example, if there was a company policy for taking 3 quotations, if you have not taken 3 quotations, okay, to miss all, if he anything comes on the basis of his professional judgment, he have the sufficient means base for suspicion, suspicion. So then he further he will examine, identify at his end. If he think need to examine in means critically examine and need to go for further examine, so then he will go for to appoint forensic auditor. Okay, but on the basis of analysis of the company records, when he appoint as a CIR means resolution professional, when he will analyze all the details and documents of the company, so then he is in position to know what are the areas where he need the forensic auditor. Okay, if he found, because when he will analyze, and analysis can be done internal analysis with the previous financial year, with the competitor, with industry standards. Okay, on the basis he can find out which is the weak area, where need to be focused, where is the gap coming, okay, where is the major difference coming. Okay, on that basis he can take decision. Okay, now define objective and scope. Risk identification, what high risk areas, what are the high risk areas? High risk areas, cash transaction. Okay, for example, if expenses shown, okay, means fake expenses shown booked. Okay, so these transactions are means high risk areas where manipulation and wrong thing can be done. These are the areas or at higher risk. Related party dealings. Okay, so these are the areas where company will lose the money. Company can lose the money. Okay, and these are the areas where manipulation can be done. And means these are the high risk areas. Okay, because when we are doing any banking transaction, so then we will have the sufficient evidence. If I am doing cash transaction, if I am doing paying cash, so then there may be chance of manipulation. Okay, engagement letter, a formal agreement outlining roles, responsibilities, confidentiality, fees, and reporting timelines. Okay, when resolution professional hiring forensic auditors, so then we need to issue engagement letter, which should clearly mention what will be his role, responsibilities, confidentiality, what will be the phase and reporting timelines along with the area. Okay, means we will also cover roles, scope of work. Okay. Example, company suspects inflated procurement payments. The audit will focus on vendor records, purchase approvals, and payments vouchers for this financial year. Okay. Means if purchase cost means when we if company made sale of rupees 10 crore, purchase was 8 crore. Okay. So then gross profit was 20%. Okay. Now in next financial year, what is happening? Sale was 10 crore. Okay. And purchase was 95 crore. So then here gross margin is 5%. So then we need to know what happened. Why means purchase is on higher side. Is the raw material is costly due to any regulatory change or any demand? Okay, so if that raw material cost is not means so means as compared means a company booked the cost on higher side and another competitor is gross margin is say 25%. So then if another company or competitor is getting raw material at lower cost, then why did we purchase at higher cost? So what was the reason? What is the industry standards? Okay, what was the raw material cost at that time period for this particular raw material? Okay, so means for example, in case if we found there is any abnormality at the time of analysis, so then question or suspicion come in the in the picture. Okay, so then we need to go for further examination. If everything is okay, for example, if we have company policy, if we have agreement with means vendor, okay, and we have a sufficient vendor, and we have taken means proper quotation, and we have purchased as per company policy, okay. So then, if these transactions will be covered normal transactions, okay. But if not, so then there is need to take further examine and take further action, okay. Now, examination of financial record and transaction, ledger and general review, okay. Voucher and invoice examination, bank reconciliation, okay. Compare bank entries with bank statement, 25 unauthorized payments or timing gap, backtracking transactions, okay. An auditor identified 10 lakh transactions recorded twice under different project codes, leading to suspect duplicate billing, okay. So then we need to verify the company reports, okay. On that basis, if we found there is a sufficient ground for suspicion, then we will go and take further action, okay. Sometimes what happened if there were two transactions, okay, after 1 month or 2 months, if these transactions were deleted from the system, so we can also means get the report from the system what transactions were deleted from the system, okay. So if we have a ERP system, so we can also get the report what are the transactions means removed from the system, okay. If these transactions were removed from the system was in the normal circumstances, so then there is no issue. But we can come to know if these transactions were or to intent with defraud, okay. So then on that basis we can find out, okay. Interview and interrogations, prepare interview questions in advance, begin with general and move to specific behavior analysis, cross verification. A procurement officer denies and resent laptop orders, but the IT head confirms delivery, leading to discovery of fake order entries, okay. So for example, as per your record is showing there should be a 500 laptops, okay. If there is a means serial number on these laptops or stickers or identification with with laptop number, if company have, so then easily you can physically verify with the help of professionals, with the help of your team. Okay, but as per record showing 500 laptops, but presently you have only 200 laptops. So then there is a question will come. This is the means sufficient ground to suspicion. Okay, so then or another, if we have purchased these laptops and we will also checking with another department, because when procurement officer will procure the material, to that material will go to the means concerned department. So IT head is also responsible to track the asset. For example, these laptops. Okay, if complete code is not matching with the IT head's report, okay, so then we will go for further investigation. How much asset were given to the IT head or to the concerned department? Okay, and what was the assets purchased? What were the assets sold? What should be the balance? And it's matching with the physical or not. So these are the sufficient grounds to take further action. Data mining and analytical, I already discussed with you. Important clean data. Load data from ERP system and clean for duplication and errors. Okay. If there are two double entries coming, so ERP will not accept this thing. Okay. And you can find out the duplication if there is any error. Okay. Statistical methods use benefit load, ratio analysis, frequency distribution to detect outliers. Search for red flags, quote unusually frequent or round number payments, sequentially invoice number or payment to dormant vendor. For example, multiple payments of 4.99 made to the same vendor across departments suggest international circumvention of approval limits. For example, if payment is done to the vendor, okay, and approval limit is 5 lakh, and we have made payment of rupees 20 lakh, okay, so then we need to know why we have done payment. We have done payment of rupees 15 lakh, okay, but why we have done payment in 4.99? That means we have overruled the company policy. The company authority given to B person to approve the payment up to 5 lakh. Okay, more than 5 lakh, up to 20 lakh authority given to C. Okay. If we can make the payment up to 5 lakh. Okay, but if payment was done of rupees 15 lakh, but that one person not means taken approval from C person. Okay, so that is also against company policy. Okay, so that maybe have a sufficient ground for suspicion if something is wrong. Why that person have done this thing? Is this thing done for the purpose of fraud or misappropriation? There may be chance their booking of means wrong purchase. Okay, for that purpose he didn't go to the proper route. So there may be chance. So as a professional, we will have to go and we will do analysis and also go for data mining. Okay, to find out, to know about that particular transactions. Okay, if we found these things happen in this in this period in this system, so then forensic auditor will do analysis and examine in all the transactions in detail. Okay, and will submit the report as per the business requirement. Okay, business requirement means appointed by CEO and NCLT or Rajinder Kumar. Now, forensic auditor We'll also review emails and digital communications. Use forensic software to scan for terms like delete, adjust, manual entry, or note recording. Okay. So these type of words. Okay. So then if we have a software, okay, there is a forensic software available to scan. For example, forensic auditor will take the data, okay, and we'll dig out the report. What type of transactions deleted? What type of transaction adjusted? In case if there is a manual entry, okay, or any note recorded entry, he will dig out from the system report, or he can also use the another software report. And these nowadays these facilities are already available in the ERP systems. For example, if you want to get the report, for example, I'm giving you an example in Tally. If you want to get the report, key how many transaction and which type of transaction during this period deleted, and I can get separate report. Okay, I can also get separate report, what type of the adjustment done. Also, if there is any manual entry, okay, so then these type of abnormal reports we can also get from the ERP system. Okay. Metadata review. Check when and by whom files or emails were created, edited, or deleted. Instant messaging and WhatsApp. Review unofficial chats that may discuss cover-ups or conclusion. Example, an email with the subject, adjust ledger before audit visit. Shows clearly evidence of intent to manipulate books. Okay. Now another use of forensic accounting tools and software, key activities and explanation, use of audit software. There are so many audit software available for the purpose of forensic audit, which help us to know or to examine these transactions, key what anomaly if happened with these type of transactions, so we can find out, okay, with the help of this audit software. Okay, and also if some files were deleted, email trails and device loops, we can also recover these reports, these details, okay, for the purpose of examining these transactions. Visualization, generate dashboard to show pattern in data, payment spikes, vendor clustering. Visualization reveals that a specific vendor receives payments every Sunday, despite the office being closed, suggesting automation or conclusion. Okay, so means we can also find or get the unusual means abnormal reports or this type of valuation which are showing abnormality. So these type of reports we can also get from the system. Okay, now why this payment happened on Sunday? Why is it possible to make the payment on 15th August, 26th January? What was the reason? Why did this happen? Now, just a moment. Forensic audit process. Now coming to the validation and formation. For example, key activities and explanation. Third party confirmation. Directly confirm balance on transaction with banks, vendors, and customers. Okay. Physical verification. Reconciliation. Okay. Means how can we verify key reports are matching or not matching? As you know, statutory also take directly confirmation from vendors, from banks, okay, to know, to ensure ki whether this balance is as per showing as per the books or not, matching or not. Okay, so these are the steps. These are the things where easily we can find out the gap. For example, if the balance showing for vendors, if we have to make the payment of 1 crore, okay. So then if company has also doing reconciliation and having the confirmation from vendors, that is okay. But statutory will also can also send the letters to directly to the vendor, to the banks, to ensure whether this amount is matching or not matching. If there is a gap, okay, so then there should be a proper reconciliation. In physical verification, insolvency professional can visit warehouse or site to physically verify inventory assets or files. Okay, if that is matching the report or not. Okay, not matching, so then there is a need to go for further investigation. There it should be normal audit, and he can take the help of a professional. If it's showing there may be chance of fraud, okay. For example, if we are doing reconciliation, if for example there are two scenarios. If I am going to visit physically warehouse, okay, and I am doing physically verification of say asset, okay. If not matching, no problem. If there is a reconciliation, if there is a reason, so then there is no problem. Okay, because it can happen. If, for example, if I visited warehouse, okay, if company is not using ERP, say, okay, so then what will happen? Asset is out from the warehouse, okay, but if that report is not updated in the system, company system, means in HO, so there may be chance of mismatching, okay. So then in this case, we need the reason and reconciliation, okay. In case of ERP, so it will update automatically, okay. And but okay, now coming, if if there is a proper reason and not matching with the report, so if that is misappropriation of assets and shown as per books showing more assets and physically less, so then they need go for a forensic audit. Okay, so these are the things are the ground to have means confirm or suspicious for these type of transactions. Okay, for the concession, match internal report, external confirmation to ensure data consistency. So this is the audit process. Okay, to with this we can ensure that everything is okay. Okay, but see, book shows 500 recognition stock. Warehouse has only 200. These two inventories have suspicion. Okay, but if billing done from the warehouse for 230 pieces, okay, and only pending for updation in company reports, so then there is no problem. Okay, but if not matching, so then there may be chance of inventory theft, and means have a sufficient ground for suspicion. Okay, so these are the forensic audit process. Okay, other method using forensic audit. In addition to standard procedures such as document review, interviews, okay, first of all, we will review the document, critically review the document, okay. And when we will critically review the document, then we will check physically, okay. If it is concerned with the asset, then we will physically check, okay, okay. And also we will means discuss with employees, with management, okay, okay. We will have interviews and discuss. Then financial analysis, we will do a financial analysis, okay. And in financial analysis, we can also find out if there is a gap, okay. For example, I have already given you example. If there was a gross profit in earlier year was coming more than 20%, now it's coming less than 5%. There is a means strong ground to go for further investigation. Okay. Forensic auditors often employ a range of advanced and specialized techniques to strengthen the investigation. These may include forensic accounting software. Okay, they use the forensic accounting software. Okay, with the help of these forensic accounting software, they dig out the anomalies report. Okay, which are not normal report. Okay, they will not means they are not interested to for your debtors report or character report. But if there is a debtor character report is means there is anomaly. Okay, means for example, if there was a terms to make the payment in 30 days or 90 days, if we have done payment in just 10 days, okay, so then system will tell us that the due date was this, we have done payment before this, okay. So then, and also if means there is a abnormality in report, if we have done payment to particular vendor, okay, many times, okay, in the same figure, for example, 4.99. So these type of reports system will generate, okay, which will be helpful for forensic auditor. Okay, ratio analysis detect unusual trends in liquidity, profitability, and leverage ratios. Digital forensic techniques recover of deleted files, analyze of metadata, and examine of system logs. Okay, then trend and pattern analysis. Use of tools like Power BI or Tableau to identify suspicious transaction trends over time. Threshold analysis to detect unusual pattern in numeric data. Okay, if there is an unusual data pattern is coming, so then we need to know why this unusual pattern is coming. If this is unusual pattern is due to any reason, okay, as justifiable for any reason, so then there is no problem. But if with the intention of fraud, so then there is an issue. And how we will come to know whether this is the intention of the fraud or not? Because when we analyze the data, because if we have sufficient data and detail, all of a sudden market rate was increased. Now, at the time of war, okay, if India will not get the diesel and petrol from the another countries. Okay, so then what will happen? If production of crude oil will reduce due to the war, so then definitely there may be chance of increasing the crude oil or petrol and diesel. So then the cost of the production may or will increase. So if there is a sufficient reason available, so then there is no issue. If there is not sufficient reason and without any reason, that trend or pattern changed, so then there is an issue. Okay, if there was no sufficient reason and there is a ratio analysis is showing unusual trends, okay, so then there is an issue. Okay, and with the help of digital forensic techniques, so we can get data from the system, which type of files are deleted, okay, but which transactions related, which transaction changed. So these are the things we can also easily get from the system itself. Now, most of the system have that type of facility in built itself. And otherwise, forensic auditor use special means accounting software to detect all these anomalies. Okay. Shadow accounting, risk assessing, parallel books of accounts to compare with official reports, lifestyle audits, examining the personal wealth and spending habits of employees relative to their demand declared income. Okay. Now, red flags in forensic audit. Red flags are warning signals or unusual patterns that may indicate the presence of fraud or mismanagement. While not conclusive proof, they signal the need for further investigation. unused journal entries, unusual journal entries, particularly near period end, misusing or altered supporting document, round number transactions or duplicate payments, frequently manual override of system controls, unexplained variance between budgeted and actual. So these are the red flags. Red flags are signs or unusual. If there is an unusual pattern, okay, so then red flag will come. Okay, so then there is a red flag is there. So we need to focus on these areas. Why this red flag is coming? That is the signal. That is the warning signal. There is an unusual pattern. Okay, that means they will give you the warning. Okay, there may be chance of mismanagement or fraud. So in advance, if there is any signal which indicating the presence of fraud or mismanagement, okay, so then the red flag is the warning signal. Okay, so then we need to take care. Employee red flags. What type of employee red flags? Okay, employee red flags. For example, this employee salary is say 20,000. If that employee all of a sudden is using or means their lifestyle change drastically, if he has purchased his car, if he has purchased mobile phone, and that means lifestyle drastically change. So then question will come into mind. What happened? Okay, so there may be chance that person is involved in something wrong transactions. These indicators relate to individual behavior and conditions that may increase the risk of fraud. Lifestyle changes, wealth such as luxury vehicles, expensive jewelry, high-end homes, not commons, rate with known income, personal financial stress, high personal debt, credit issue or gambling behavior issue, sudden changes in mood, increased stress or sign of substance abuse, operational red flags. The regulator tends to make mandatory leaves or sick days, frequent access to system outside of work hours, lack of segregation of duties, high turnover in fraud-prone departments. What are the management red flags? Indicators suggesting possible collusion, manipulation, or weak governance at the management or leadership, non-cooperation with auditors, audit disputes, concerted decision making, regulatory non-compliance, poor internal control environment. So these are the management red flags. Okay. Green flags in forensic audit. Green flags are indicator of sound internal controls, transparency, and ethical practice within the organization. They are often reflect a low likelihood or fraud or misconduct. Employee integrity indicators, operational strengths. Okay, when your budget is matching with actual result, no outstanding or excessive disbursement claims. Okay, when you have proper system, so that will show you the green flag in forensic audit. Okay, red flag is the warning for fraud and misappropriation of funds, and green flag means there is a proper control, proper system, and ethical practice in the organization. Okay, so then company can ensure that there are very much less chance of fraud or miss doing miss wrong things, because you have a when you have a strengthened internal company policies. Okay, so then there are very much less chance of misusing of funds and fraud, something like that. Okay, unusual posting to be verified but not always bad. Okay, well-documented financial process and audit trails, employee voluntary reporting irregularities. Identifying and interpreting red and green flag is essential to the effectiveness of forensic audit. Forensic auditor must combine analytical, technical, behavioral assessment and investigate methods to develop a comprehensive understanding of the issues at hand. The presence of red flags must justify deeper examination, while green flags can help confirm areas of control and effectiveness. Okay. Operational indicators. These are the operational indicators. Decentralization without effective oversight, multiple or unusual bank accounts, rapid and unexplained staff reductions, frequent changes in auditors or consultants, year-end transaction. If company have done so many year-end transactions, that is also suspicious. If they have done so much year-end transactions, there may be year-end transactions for the purpose of closing of the accounts, closing the books or account. But if there is abnormality, if major of the transactions happen in the year end, so then there may be chance that something is wrong. Okay. Now, reporting and documentation. Prepare a final report, include executive summary, methodology, key finding, and legal provisions. Annexer and proof will attach. Recommendation will be there. Report reveals siphoning 2.3 crore by both vendor. Recommendation complaint under section 420, Companies Act 447, and blacklist of vendors. Okay. So means further action will be taken. If there was a no vendor was there and payment was done to the vendor, you have not purchased anything, you have done payment for the purpose to intend for the purpose of fraud, so then there is need to take action, further action, legal action, follow up and litigation support. So forensic auditor will also means support in litigation as per means legal requirement. Based on the forensic audit, the company files a case in NCLT against ex directors or for fundamental transactions during CRP. Okay, so means because on the basis of forensic audit report, resolution professional will file a case NCLT so that if it's possible to reverse those transactions. Okay, otherwise that ex-director or concerned person will be responsible and legal action will be taken as per the IBC code. Okay, conclusion, a forensic audit is a multi-step evidence-based process that combines financial investigation, digital analysis, human intelligence, and legal interpretation. Means we do find analysis, okay, on the basis of financial reports, try to find out the any anomaly, any change in patterns and trend. Okay, with the help of digitally analysis, we try to find out what type of transaction deleted, if record deleted, record changed, and we recover those deleted files. With human intelligence, we interview with the employees and concerned persons, and as per the legal, we take appropriate action. Each step plays a crucial role in ensuring that the fraud is identified. First, forensic auditor will identify whether fraud happened or not happened, something wrong happened or not happened. First, he will identify. Okay, as per the scope of work, as per the areas, then he will prove on the basis on the basis of records, on the basis of evidence. Okay, on the basis of analysis. Okay, with the help of digital. Okay, then if this is proved that something happened wrong or fraud, so then the same thing will be reported and acted upon accordingly as legally as per the statutory requirement. Okay, so this is the forensic audit process. This is very crucial because this explains each and everything by step. Why do we need to hire forensic auditors and how do we know if something happened wrong or not? Okay, so on that basis we take action. Now, forensic audit approach, the 7I theories given under the forensic audit. Okay, what are the 7I theories given? The 7I theory is structured and strategic approach followed by forensic auditors who uncover, analyze, and document financial irregularities, fraudulent activities, and control lapses. The term 7I refers to 7 critical dimensions, okay, for observation and inquiry that an auditor must apply when conducting a forensic investigation. Okay. Eyes on documents. He will scrutinize financial statements, voucher, ledger, invoices, examine authenticity, completedness, and consistency of documents, detection of backdated invoice. Okay, detection of backdated invoices or incomplete vendor agreements. Okay, so this is the audit approach. Means he will scrutinize the document, he will identify, he will verify the documents. Okay, the first step will be taken by the forensic auditor. He will review the documents in detail. Okay, then eye on transactions. Trace entries in the books of account to their source and final effect. Analyze high value, round figure, or split transaction. Journal entries near period end for manipulation. Okay, so then first eye on documents, then second is eye on transactions. Okay, key this transaction happened if at the end of the financial year, so then need to review. Key if these are the normal transactions. For example, if depreciation booked at the end of the financial, no problem. Okay, if normal invoicing done, no problem. If normal purchase booking, no problem. If so many entries done for the purpose of fraud, okay, for manipulation, so then he will have to means verify these transactions. Eye on documents, eye on transactions, eye on internal controls. Okay, what are the internal controls? Detection of same person raising, approving, and procurement processing a payment. Okay, so that is not the proper control. As per company policy, if there is a proper system is there, if there is a proper company policy, okay, so then there should be another person for means first who is updating the report. Okay, maker. Okay, there should be also maker, checker, approver. Okay, so if a person is maker who is updating the reports, okay, and B is the checker who is checking and verifying the reports, and C is the approver who is approving the payment. So this the company policy should be like this: maker, checker, and approver. Okay, so he will review and check on the internal controls. If someone overrules the internal controls, so then there is a problem. Okay, so if all those three functions is done by only one person, so there may be chance of fraud, okay, or manipulation. I on digital trials. Okay, with the help of example, we understand email trace showing instruction to override system controls. Okay, if with the help of digital forensic tools, we can recover the digital files and authorize access. While whether digital records are altered, concealed, or manipulated, we can find out with the help of the digital trials. Okay, so we can get the report from the system itself. Eye on people if there is a change in human behavior. Okay, eye on third parties, view vendor contact, customer contacts background. Okay, and payments. In this, what we do, a vendor linked an insider through common address and ownership. For example, vendor customer contact background and payment patterns, confirm transaction directly with the banks, vendor customer or third party agents, identify related party transactions, shall entities or potential kickbacks. Okay, if this is a related party transaction, so then and we are doing payment, vendor payment, and that person is related person, so then there may be chance of kickbacks. Okay, so that is the sixth point, and the seventh is eye on red flag. Okay, identify unusual patterns. Unusual pattern means there is a red flag. Okay, deviations, gap in financial and personal behavior. pay close attention to warning signals, apply analytical tools to highlight inconsistencies or anomalies. Example, a sudden spike in revenue without corresponding cost increase. That is a red flag. Okay. What happened in this situation? What will happen? If this situation is happening, you have purchased material of 80 crore. Okay. Normally, your sale was 100 crore. Okay. And I'm assuming there is no opening and closing. So, okay. Now, all of a sudden, sale increase to 200 crore. Okay. But purchase is only 80 crore or 100 crore. What happened? Your gross margin is changed drastically. So then it shows something is wrong. So then unusual pattern. Then unusual pattern is red flag. Okay. So means with the help of 7I audit approach is adopted by under the forensic audit. Okay. So it is very easy to understand with the help of the 7I approach, which is adopted by the forensic
मैं कर
audit.
रहा हूँ, मैं बता रहा था कि ये करके पेज में डालूंगा.
Okay, now 4-phase fraud cycle, a structured approach. Okay, now there is a 4 type of approaches:
कर
preventive
दो,
phasing.
तुम काम करो भाई, ऑडियो जूम मत बंद करना.
Someone is unmute, please mute. See, there are 4 phases fraud cycle. Okay, preventive, detection, correction, and reporting. Okay, so a structured approach also can be categorized in the 4 phases: preventive, if forensic audit is doing for the prevention, if another is detection, another is correction, fourth one is reporting. In 4 phases, fraud cycle can be structured. Okay. In what we do in prevention: due diligence, red flag monitoring, scan theory, whistleblower policy. If we want to prevent, okay, we want to save our company for any fraud, so then what we'll do? We will have the proper company policy. There should be a due diligence system. If we have a whistleblower policy, okay. If there is a red flag monitoring is if there is any unusual pattern is coming, so then he will raise the red flag. Okay, so these type of things, if company is doing, okay, so then this is called preventive. Okay, because any fraud happened, okay, we are doing all those things. So if you are using these things, this can prevent for misappropriation of funds or fraud. Okay, so there will be very less chance. Okay, so this structured approach is called preventive. Now detection. For example, identify red flags. If there is a unusual pattern is coming, okay. Now digital forensic covered ops, background checks, vendor vigilance. Okay. So then if there is a red flag, so then we need to find out or we need to detect. Okay. Why this unusual pattern is coming. So this is the second step, detection. There is another step is correction, remedy and action, interrogation, identification, risk identification, control improvement. So that is the corrective action is taken in the third phase. Fourth phase is reporting. Okay. If that fraud or misappropriation of funds happened, so then forensic auditor will show or provide all the details in the reporting. Evidence collection will be done under this phase. Compliance check will be done. Forensic report drafting will be done the fourth step. So this is 4 phases fraud cycle. Okay, preventive, detection, correction, and reporting. Okay. Mini reporting, activity summary, methodology, key finding, legal implications, recommendations, and supporting. All those things are done in the financial report. Corrective actions, interrogation, we have already discussed in the summary. Okay. Now, differentiating forensic audit from regular audit and transaction audit with the help of table in summary, we will understand. There is a forensic audit. Forensic audit specialized examination of financial reports conducted with the objective of detecting, investigating, and documenting fraud, financial misconduct, or criminal activity. It involves investigative techniques, include data analysis, interviews, digital forensics, and legal procedures, and is often used to gather evidence for legal proceedings or regulatory enforcement. Okay, now there is a regular audit, regular means statutory audit or internal audit. Okay, so in this is also independent assessment. Okay, in this what we do, whether the present or true fair view, the past transaction happened. Okay, but in this means no critical examination or investigation done in the regular audit. Okay, regular audit is difference between the forensic audit. Okay, and regulatory audit is this it's a mandatory requirement or statutory requirement. Okay, now there is a transaction audit. If company means needs transaction audit for a particular means area or particular transaction, so the company also go for transaction audit. Transaction audit is a focused audit review specific financial transaction or group of transaction to verify accuracy, validity, and completeness with the internal policy, procedures, or regulatory requirement. It is often conducted as a part of internal audit procedure or special reviews. Purpose detect errors, irregularities, or control of weakness in specific transaction of departments. Okay. With the help of this summary, we will understand. There is a different objective in all the three categories: nature, scope, period covered, methodology, outcome, tool used, confidential. Major things we will discuss: objective to investigate suspected fraud, misconduct, or financial crime, covered under forensic audit. In regulatory audit, to verify true and fair view of financial statements. In transaction audit, to verify correctness and compliance of specific transactions. Okay. Now, scope. This is narrow scope and case specific. Okay. Broad scope covering all financial statements, specific to defined transaction, department of periods. Okay. What are the methodology used? In here includes forensic accounting, digital forensics, interviews. Here, analytic procedure, test of controls, subsetting testing. In transaction audit, document review, sample check, and walkthroughs. These are the things in tool used here. In forensic audit, forensic auditor use forensic tools. Okay, to know the to get the means abnormal data. Okay, anomaly data. Okay, and here audit software use Tally, SAP, Oracle, MS Navision. So these are the software used in the regular audit. And transaction audit check audit working papers, ERP transaction reports. Okay. Now forensic audit under the IBC code, legal provision under IBC. The appointment of forensic auditor is a context specific. It is not required in case where there are no transaction to examine, book of accounts are unavailable, no assets are traceable or recoverable under the corporate actors ownership. Okay. Means what are the legal provisions? Is this mandatory to appoint forensic auditor? The answer is no. Okay. When any resolution professional is appointed in for CIP or liquidation, so first he will review himself the detail and documents and records. Okay. And as per records, if there is no transaction, so then there is no question arise to appoint any forensic auditor. Okay. If you don't have any data, account books are unavailable. So then why do you go to hire a forensic auditor? Okay, no assets are traceable and recoverable because in these situations, so there is no need to appoint a forensic auditor. This is a context specific. If these transactions happen, means if these transactions is professional transactions in which preference was given, undervalued transactions and fundamental transactions happened. Okay, so on the basis of document detail or as per the requirement, the insolvency professional take decision or action on the basis of professional judgment as per the requirement. Forensic auditor required or not required. Appointment of forensic auditor. Who can appoint the forensic auditor? Resolution professional, COC, means resolution professional will appoint. See here, under section 22A, IBC empowers the IRB to appoint accountants, legal professionals, or other experts as necessary for preserving and managing the corporate debtors asset. Okay. Approval from the committee of creditors. He will take the approval from the committee of creditors. Okay. Then scope of work, number of years to be examined, nature of transaction should be clearly defined and approved by COC. COC may also flag specific transactions or concerns that require forensic review. Okay. So appointment will be done under section 22A, which empowers the professional to appoint accountants and legal persons or other experts as per the business requirement. If there is a requirement, okay, so then approval will be given by the COC. Okay, if COC not approved, then he can also, if he need, then he can also means approach to the NCLT. Okay, and after approval, he will appoint the forensic auditor. Role and scope of forensic auditor under IBC. He will review the claims, monitoring ongoing transactions, due diligence on resolution applicants, monitoring compliance and with resolution plan, examination of avoidance transactions, assets tracing, reconstruction of financial reports to identify undisclosed or diverted assets. He will verify ownership verification, family and close bar transaction mapping, support during liquidation. Okay. So assessment of financial records and transaction patterns, evaluating of bidding process and liquidation process to ensure transparency and valuation. Rising relevance of forensic services under IBC. See here, with increasing complexity in the corporate source and financial regularities, forensic audit have become an integral part of CRP regulation process. Demand for forensic experts has significantly increased, reflecting the importance of transparency, governance, and accountability. The rise of forensic assignments under IBC supports broader efforts in cleaning up non-performing assets and improving investors' confidence. Now, question comes: who can be appointed as a forensic auditor? Okay, forensic auditor who have education background become under BBA, CA or equivalent, certification preferred CFE, CFA, CAVA, and impanelment Indian Bank Association. Minimum 5-year experience in forensic investigation. Okay. At least one partner auditor must possess the required experience, including work done in other firms and entities. Domain experts required: book debt analysis and credit appraisal, verification, cash book, ledgers, petty cash, analysis of foreign trade document, SWIFT remittance trails, review of buyers credit, LC and forex contracts. Okay, now coming to the landmark judgments related to the forensic audit. Okay, this also helps us to understand the requirement of the forensic auditor and what step is to be taken. This also guide us related to the forensic audit. Okay, so we will discuss major landmark cases to understand. Now, there was one Supreme Court judgment in the landmark case, Home Buyers Association versus Amarpali Group 2019. What was the background? The Supreme Court intervened in the Amarpali real estate crisis where home buyers funds 3,000 crore appeared diverted from completion of housing projects, a court-appointed forensic audit confirmed alleged fund diversion and violation of laws, including FEMA and anti-money laundering provisions. Okay. What were the key issues? Whether forensic audit reports can be shared with agencies like ED, Delhi Police, and ICA, whether court-appointed auditors can seize documents or compel cooperation, how to ensure fund recovery for completing stalled projects, court observation, and others. The forensic auditor report must be handed over in sealed envelopes to ED, Delhi Police, and ICA within 7 days. Directed 7.16 crore to NBCC for completing unfinished projects. Formation of a nodal cell for issuing completeness certificates. Ordered police to seize documents, ensure auditors receive full cooperation from Amarpali officials. What was the key takeaways and significance? Courts can mandate forensic audits and facilitate evidence sharing with law enforcement and professional bodies. Multi-agency coordination enables criminal, regulatory, and professional investigation to run in parallel. Home buyer relief. Court directly fund dispersal, ensured project completion and consumer protection. So these were the takeaways and significance. Conclusion: the Amarpali judgment shows the Supreme Court's robust use of forensic audit to uncover financial misuse, enforce accountability, and protect vulnerable stakeholders, all backed by judicial authority, enabled multi-agency coalition. Okay, means court can also give instruction to appoint forensic auditor in case if there is a evidence, if there is a suspicious something happened wrong. In this case, what happened? Court appointed forensic auditor because there was an allegation the fund was diversified, which is the violation of laws, FEMA and independent money laundering. In that case, if there is an allegation like this, then court can appoint forensic auditor to find out the actual facts on the basis of investigation, and according to the report, according to the facts, court can take means further these steps. Just one. Okay. Now coming to the another judgment. There was another judgment, Supreme Court judgment in the landmark case, State Bank of India versus Rajesh Agarwal. SBI and other banks conducted forensic audit on Rajesh Agarwal's company before declaring its accounts as a fraudulent under RBI master directions. The borrower challenged the classification, arguing it violated natural justice by denying notice and hearing. Okay. Means in this case, what happened? State Bank and other banks conducted forensic audit. Okay, so as per RBI circular, the borrower challenged the classification. Okay, and he also give challenge. There is a violation of natural justice because they are not giving notice and not hiring and appointed forensic auditor. Okay, so what was the key issue? Whether bank must issue notice and provide hearing before classifying an account as a fraud based on forensic audit finding, the applicability of audit, alternate pattern under regulation guidelines. Court observation. The Supreme Court affirmed that audit alternate pattern applies. Borrower must be given notice a copy of relevant forensic findings, and a chance to respond. Participation during the audit process alone is insufficient to meet the natural justice requirements. The decision classifying an account as a fraud must be reasoned and documented properly. Okay, so these were the court's observation. Okay, what was the key takeaway and significance? Due process in force, bank must follow fair procedure before segregating accounts. Borrower rights ensure transparency in forensic-based decision impacting creditworthiness. Present setting standardize how forensic audit and fraud classification must adhere to natural justice. Conclusion: the judgment bridges forensic investigation and procedural fairness, reinforcing borrowers' protection by mandating notice, hearing, and reason decision before concluding fraud. Okay, means bank can appoint forensic auditor, there is no problem. But there must be a natural justice, proper notice and hearing and involvement and reason must be communicated to the party. Okay, that was the conclusion of the Supreme Court. As per the RBI circular, they can appoint forensic auditor if required, if something had happened wrong and fraud and misappropriation. On that basis, bank can appoint forensic auditor. But as per natural justice, proper notice and hearing to give given to the party. There is another case for landmark case, NCLT judgment in the landmark case, Allahabad Bank versus Link House Industries Limited. Allahabad Bank versus Link House Industries Limited. Background: Allahabad Bank filed a section. Filed a Section 7 application against the corporate director for default. NCLT directed a forensic audit, okay, of the borrower's accounts before admitting the case under the case of examining a Section 75 violation, false information by the creditors. Okay. Now issue whether NCLT can order a forensic audit prior to admission of a Section 7 petition, potentially delaying the process. Okay, now what was the NCLT observation? NCLT held that Section 7 admission is a summary procedure to be completed within 14 days. A forensic audit at this stage is impermissible and amount to an unwarranted inquiry. Section 75 cannot be invoked to defeat a creditor's right under Section 7. Okay. For example, if any person want to file case, financial creditor want to file a case. Okay. So then he has the right to file a case under Section 7 against corporate debtor or corporate guarantor. Okay, if there is any anomaly, if there is any documentation part, there is any issue. Okay, so then court can ask for the documents or within 14 days. Okay, but at this stage, but he cannot ask or give direction to do forensic audit of financial creditor. Okay, so that means he will not be able to submit the petition under Section 7 unless until that forensic audit complete. But is this as per law of IBC code? The reply is no. Means financial creditor have the right to submit application under Section 7. Okay, if court can admit that case or means dismiss that case on the basis of documentation or on the basis of, means on merit basis with the reason, But in case if required, forensic audit will be required during the CIRP after admission of the case. Okay, and that forensic audit will be done for the corporate debtors books, not the financial creditor books. Okay, so this is the landmark judgment ki whether forensic audit order can be given by the Honorable NCLT Court before admission of the case and also against okay the financial creditor. Now, forensic audit cannot be used to delay or prevent Section 7 admission. Section 7 focuses on default and record of debt, note on panel provisions. NCLT reinforced the time-bound nature, IBC, and restricted tribunals for invoking forensic audits before admitting insolvency proceeding. It upheld the primacy of creditors' right under section. Means after accepting application, Honorable Court can give direction or order to appoint a forensic auditor. Okay, but before admitting, means NCLT cannot make an order because it will delay to submit the applications. Okay, and it will take time. So that is not the proper procedure as per or rule as per this under IBC code. Okay, so in this situation, before admitting case by the Honorable Court cannot appoint forensic auditor. Okay. Now coming to the NCLT judgment is landmark of Mohammad Malik Chauhan versus liquidator of corporate debtor. The background. Liquidator relied on a transaction audit report to file an avoidance application under the section 43 alleging professional transactions. Okay. Issue is a transaction audit report sufficient to justify an application under section 43. Okay. Means liquidation is going on and on the basis of transaction audit report, liquidator relied and on the basis of this report, action taken and application submitted under section 43 with the Honorable Court. Now NCLT held that a transaction audit report is a valid basis for initiating avoidance actions. The liquidator doesn't need a counter court appointed forensic auditor if evidence is credible and well documented. Okay, for example, if self evidence is there, okay, and if there is also not have any transaction audit, although he can submit the application under section 43 if resolution professional have a sufficient background or evidence. Okay, but if resolution professional have a transaction audit report which is giving further strengthen for their decision to file the application under section 43, so then resolution professional can, on the basis of the transaction audit report, can also file the application under section 43 because this report also itself have the sufficient means evidence and document. Okay, so on that basis, application can be submitted. What are the key takeaways? Liquidator can rely on professional prepared audit reports to file section 43 or section 66 application. Thus, court supported a pragmatic approach toward forensic findings. Means on the basis of any professional agency, professional person, on that basis, liquidator can also take liquidator can also rely and take appropriate further action. Okay. Now, what was the conclusion? The judgment empowers insolvency professional to act decisively using credibly forensic or transaction reports if it upholds speed and substance over formalizing. Okay. Now, there is another landmark judgment. Okay. In the landmark case, which Mrs. Vishali Arun Padrikar versus Hemant. Okay. NCLT Mumbai branch, 20th March 23. What was the background of this landmark case? RP alleged that the suspended director concealed assets and sought their recovery without concrete forensic audit evidence. Okay. Can recovery actions be initiated without a forensic or transaction audit establishing valuation and ownership? Okay. What was the observation? NCLT ruled that no relief can be granted unless the RP substances claims with the documentary or forensic evidence. Finally, distribution and conclusion of liquidation cannot rest on unverified allegations. Okay. Means what are the key takeaways? Substantiation through forensic evidence is mandatory before pursuing legal action or making allegations. Because if you are making only allegation, if you don't have proper evidence, okay, or document which is supporting this means wrong thing happened, only on the basis of allegation, you cannot take further legal action. Okay. If you have a sufficient ground, evidence, okay, and documents, which is showing and means confirming this thing was happened. Okay. If you don't have evidence, then you will have to take help from other professional. Okay. In other professional means you will have to take help for further agency, forensic agency or forensic auditor, because that forensic auditor will identify, analyzes, okay, identify, and on the basis of identification, he will means conclude and means on the basis of evidence, okay, he will means prepare the report, okay, and he will also means enclose all the evidence, all the reports, all the documents with their report on which what ground he found that agency found that transaction was not as per the law. Okay, so then on that basis, the professional can take further can take legal action. Okay, only allegation is not a sufficient. If I am allegation putting only allegation, if I don't have any evidence or any proof, so it will not help. Okay, that is not the right or correct way. Okay. So NCLT ruled that no relief can be granted unless the RP substances claims with documentary or forensic evidence. Okay, see here. Substantive claims with the documentary or forensic evidence. Okay. If he have sufficient backgrounds, okay, and suspicious transaction happened, okay, so then he can report to the NCLT and accordingly to further action is to be taken. Okay. Now, RP must conduct through documentation and valuation prior to invoking IBC remedies conclusion. This case emphasizes the evidentiary foundation required in insolvency case. NCLT reminded RPs and liquidator to avoid speculative allegations and rely only on audit back findings. Okay. This on the basis of only speculation, he cannot put the allegation unless until if that person has the proper evidence or proper documents. On that basis, if he found irregularity, so then he can take further action. Otherwise, only on the basis of allegation, means for the purpose of taking legal action, he must have the documentation evidence. If don't have, so then he will have to take the help of the forensic auditor, who will help to identify and share the document and evidence for that particular transaction to take further appropriate or legal action according to the IBC code. Now, there is another final judgment. Okay, that is also very landmark judgment. Okay, it is also used in another cases which also guide. Okay, now IDB Bank Limited versus Ruchi Soya Industries Limited, NCLT Mumbai bench background. Following a court mandate forensic audit under section 32A, ex-directors resisted cooperation. Okay, ex-directors resisted cooperation issued by the directors and officers of the corporate debtor are legally obligated to assist in the forensic audit related to pre-CRP offenses. Okay. The question was, issue was that whether directors and offense officers of the corporate debtors are legally obligated to assist in the forensic audit related to pre-CRP offenses. Okay, as per the law, the professional have to verify the transactions 1 year. Okay. Observation: the tribunal held that section 32A mandates cooperation from all persons concerned with the corporate debtors. Non-cooperation with forensic investigation is contrary to the law and may attract liability. All the concerned persons, including corporate debtors, employees, will have to cooperate to forensic auditors. Otherwise, legal action may or will be taken by the appropriate authority in case if that concerned person, corporate debtor or employees, in case if they will not cooperate with forensic investigation, okay, that will be contrary to the law and may attract liability. So means as per law, corporate debtor, ex-corporate debtor also, and officer will have to cooperate to to forensic auditors. What are the key takeaways? Forensic audit enforcement under section 32A is binding on the past and present management cooperation is not discretionary. Okay. Forensic audit enforcement under section 2 is binding on past and present management cooperation is not discretionary. It is a statutory obligation. Okay. Means forensic auditor is doing forensic audit for the past transactions and also for the present management will need to cooperate. This is the statutory obligation. Okay, so he cannot refuse for cooperation. Okay. Now coming to the conclusion, the NCLT firms upheld the right of investigative agencies and professionals to conduct forensic audit. It reasserted the legislative intent of accountability and post-resolution justice under the IBC. So, these were the landmark judgments. Okay, majorly we have with this PPT, we try to understand what is the significance of forensic audit, what are the 7 key eyes, what are the structured approaches with the help of the also landmark judgments. Okay, what is the process adopted during the forensic audit? why do we need forensic audit? What are the means things which means means set the background for suspicion? Okay, we have covered almost everything for the purpose of forensic audit. If we want to means protect the company for this type of misappropriation funds and fraud, so then we need to set up proper company policies. Okay, and we should have strengthened the blower policy grievance system. Okay, there should be a proper red flag or green flag system in the system so that we can company can take action. Okay, on or before time. Okay. Okay, if you have any query or question, you can ask. Otherwise, we will conclude this session. I hope everything is clear.
Yes, sir.
Okay, we can conclude. Okay, if you have not any questions.
We are all
Okay.
clear.
If you have any query question, you can ask. Otherwise, we will close.
So you can continue.
Shall we conclude, sir? Rajinder sir?
What time will be another session, ma'am?
Then now there is with our lunch break. Next session will start at 2:30.
Thank you very much.
Next station 220,
Sir, 2:30.
2:30. Okay. Thank you, ma'am.
ये कितने बजे रिज्यूम हो रहा है? वापस कितने बजे रिज्यूम हो रहा है सर?
हेलो, सर सेशन में रिज्यूम है 2:30।
2:30 ओके।
Shall we start, ma'am? Suhasini ma'am, are you there?
Yes, I'm there. I'm there. Am I audible?
Yes, ma'am. Now the session will be taken by Ms. Suhasini Ashok B, ma'am, as a speaker, along with her colleague Ms. Janvi, on the topic role of IP in PUFE transactions. Let me briefly introduce Suhasini ma'am. Ma'am has done Master in Commerce and Law. She is advocate, company secretary, and IP. She is triple gold medalist and university topper in law. She has over 15 years of experience as PS, IP, and advocate. She has worked with Ujjivan Financial Services, Agis Infotech, Bangalore Stock Exchange, Hyderabad Stock Exchange, and Broking House at Bangalore, and with a commodity trading company based at Singapore. She was a partner with one of the top IP where she worked on restructuring of companies under IBC. Currently, she is founder and designated partner at T2S Niyam Advisors LLP, who are partners with L&Q LLP, a reputed firm in multidisciplinary consulting firm providing services in transaction advisory, legal due diligence, risk advisory, financial reporting advisory, ESG advisory, forensic accounting service, cyber security,
Yeah.
IT, risk consulting, and digital transformation. Now
Thank
I request ma'am kindly start with the session.
Okay. Okay. Thank you, Anjali ma'am, for giving a wonderful introduction about me. And also, I thank ICSI IIP for giving this opportunity. So, the topic for today is we are delving upon the PUFE transactions, that is avoidance transactions under IBC. And morning, sir has touched upon the what are the preferential, undervalued, fraudulent, extortionate transactions under IBC, and he has explained the various examples how to identify the PUFE transactions, what are the provisions. So I'll be touching upon the few practical aspects under PUFE, under preferential, undervalued, fraudulent, extortionate, that is avoidance transactions under IBC, and also role of insolvency professionals. And I'll just touch upon few judicial precedents in this regard. So, as ma'am has mentioned, I have worked with an IPE as I was associated with an IPE as partner. So currently also we are handling two CRP assignments, me and my partner, and we have handled close to 40 IBC assignments, restructuring assignments. And coming to the experience in PUFE transactions, forensic audit and transaction audit reports, we have done close to 10 PUFE applications. In that, some of them are yet to be heard, pending for adjudication, and few we got the orders. So I'll be sharing few of our experiences while as an IP during CIRP or liquidation, the how the forensic audit reports are taken up during the CRP process or the liquidation process, and how to handle when there is no information provided by the erstwhile management, and how to function in a CRP process or the liquidation process in the regarding the PUFE transactions. So, Janvi, can you share the PPT, please?
Yes, Melinda.
So basically, if we see the preferential, undervalued, fraudulent transactions, the very detailedly it is, sir has touched morning from section 43 to 51. It clearly gives the code and also the relevant process for the how to file, how to assess the preferential, undervalued, fraudulent, extortionate transactions, and how to take this up and file for a recovery to the creditors who are at loss due to these transactions prior to CRP period. That is again There is a look back period for the preferential, undervalued and extortionate transactions with related parties and with unrelated parties. The related parties, it is 2 years, and for related parties, it is again 1 year. And also for fraudulent transaction, once it is a fraud, it is always fraud. So there is no look back period for fraudulent transactions. And the main duty of an insolvency professional under code is into 3 functions. One is the insolvency professional, that is RP, IRP, or the liquidator. First, they have to form an opinion. So first is forming an opinion on this preferential, undervalued, fraudulent, and extortionate transactions. Second comes determining on the transactions. So forming an opinion, determining on the transactions, whether they fall under the avoidance transactions, then filing an application with AA for appropriate reliefs. So this is how basically the IP has to function. And I'll just briefly touch upon, I'll not take much time on explaining the what comes under the ambit of preferential, undervalued, fraudulent, extortionate transactions. Sir has taken it up very detailedly. So maybe we can discuss few case laws where how these transactions were assessed by the adjudicating authorities while disposing the applications filed by the IPs. So we can go to the next slide. So when we discuss about the PUFE transactions, there are various provisions under IBC, which we can just touch upon. Section 25(2)(j) asks duties of resolution professional. That is, there is a duty on the RP to file an avoidance transactions. If there are any transactions, he is duty bound to file the application. So once we just divide the roles and responsibilities of an insolvency professional during CIRP, it is he has to run the CD as a going concern. He has to call for the claims, constitute the COC, then again issue EOI, and then do the marketing for getting the prospective resolution applicants, getting a resolution for the company, and also one of the duties is to file an application for avoidance transactions. Then again, section 35(1)(I), the powers and duties of liquidator. Here, the liquidator is empowered to investigate into the financial affairs of the corporate debtor to determine the and undertake the preferential transaction. See, if we see, there is a duty on the RP to file an application for, he has to form an opinion, determine the opinion, he has to come to a determination on the transaction, whether there are any avoidance transactions, and he has to file. But whereas liquidator is empowered to investigate. So there is an investigative powers which are given to the liquidator under the code. Again, when we come to section 54F, this is again duties and powers of resolution professional during the personal insolvency resolution process. So during personal insolvency resolution process also, for the personal guarantors of the corporate debtor, RP is required to file an application regarding these avoidance transactions. Then again, regarding section 26 also, the application for avoidance transactions not to affect the proceedings for the filing of an offer. Once avoidance transaction applications are filed, it will not affect the proceedings of the CIRP process. This is very clear under section 26. So in case if there is any kind of applications which are filed by the management, in case RP takes up any transactions IA, if it is affecting the CRP process, then under this section, the RP has a recourse. So I'll just touch upon I'll not take much time explaining what are these transactions, because morning sir has detailedly explained. So can we go to the Let me just go to the preferential undervalued fraudulent. We'll just take some time on this, Janvi. You can go to the definition of preferential undervalued. So when under section 43, the preferential transactions are defined, which is the transactions which occur between a distressed company and a specific creditor, giving a preferential treatment to that creditor. These transactions will involve repaying the debts or transferring the assets or any other benefits to a particular creditor. Here, the preferential treatment or advantage is given to the other creditors, putting a disadvantageous position of the other creditors in the overall position of the corporate debtor. So when you see, I'll just try to give one example. In one of our case, what has happened, the corporate debtor has a group companies. The group company has given ICD, intercorporate deposits, as well as the private parties have given intercorporate deposits. And there are few banks. Here the banking was multiple banking, not a consortium. So there were 12 to 13 banks and around 20 ICD holders who are private parties from across India. And there are group company ICDs. So the company, what they have done is, prior to 2 years, to 1.5 year prior to CRP 2 years, they have paid the one of the few group company ICDs they have paid, giving a advantageous position over the other creditors. There were other ICD holders, there were other creditors. And also the company was having a current account with one of the bank, and they paid the loan towards that bank account where they have current account instead of paying the samely placed creditors. So all these will be treated as a preferential transactions. So I've just gave few examples. And undervalued transactions. So undervalued transactions are the transactions which are taken up for selling or transferring the assets of the corporate debtor at a price significantly below the fair market value. So whatever, suppose the company has any assets and the management sells or transfers it at a significantly below the market price. And also the transactions are taken up for the benefit of a particular party. And the transactions which deplete the company's assets, potentially disadvantaging the other stakeholders. These are all falling under the undervalued transactions. Go to the other slide. Janvi, can you go to other slide?
Ma'am, this is another slide only fraudulent and extorted.
Sorry. So there is, we have discussed preferential undervalue. Now comes the fraudulent transactions. So fraudulent transactions are those transactions which are intentionally done, misrepresenting and with a illegal motive, fraudulent motive to deceit or illegal activities while doing any operational or financial transactions. So these transactions are done with a motive to deceive the stakeholders. And example like falsifying the financial statements, then misappropriation of funds, engaging in insider trading. And this is again fraudulent. To prove the fraudulent transactions, it is difficult because you have to establish the mens rea here. And again, one more thing I want to make it clear is fraudulent transactions, applications can be filed. There is no look back period. Once a fraud is always a fraud. Then extortionate transactions. This is again excessive, unfair or oppressive terms. These transactions involves exorbitant interest rates or disproportionately benefiting the creditors at the expense of the company. So here they are giving benefit to some parties where the exorbitant interest rates or by um, just charging the fees very high, or again they are disproportionately placing the creditors and like collateral requirements. They'll try to have some collateral requirements and do extortionate transactions that will weaken the financial position of the company. This is also one of the reasons why the companies go into the distress. Yeah. So let's go back to the previous slides. So what an IP has to do broadly is first and foremost, very important thing, once the company gets into CIRP, then the insolvency professional is supposed to take over the control and handover from the existing management, that is board of directors of the company or whoever the senior management. They have to take over the complete control of the corporate data, information, data, and all the financial, operational, corporate, and all statutory records of the company. And before that, RP has to do his diligence. Once he gives, see, what I can suggest is, once you give the consent to act as an RP, or suppose in case if NCLT is appointing you from the list of empaneled IPs, what you have to do is immediately do basic master data and from whatever public documents available, try to take a report on the corporate data. And first, download from NCA all the financial statements and analyze the financial status of the company. And then analysis of financial statements is again horizontal, vertical, and ledger review. See, whatever are the items in the financial statements, we have to analyze the status of the company, health of the company. Then documents review. One is whatever documents the CD provides, the management provides, or whatever you get from the, and even as an insolvency professionals, we can ask the bankers, the creditors also, the whatever documents available with them. Then once we get the documents, it is again, we have to review the documents. The source can be from external, from public domain or third party confirmations also. And from internal records also we can get. So after that, once again, see, the duty, the IBC casts vote duty on the insolvency professional. The timelines are very strict. Timelines are very tight for forming an opinion and determining. That is again 135 days, 105 days. Then again filing the application within that timelines. It's a very uh, if you see, it is not more than 4 to 5 months. Within that, you have to file the application. It is again majority of the times it takes 2 to 3 months to get the basic information from the corporate data. In majority of the cases, the management is non-cooperative. So for getting information, again, see, the information, basically the detailed information about the company is not available. And then immediately non-cooperation IA has to be moved with NCLT. And within, what I can suggest is practically within 1 to 2 months, if you are not getting cooperation from the directors, it is better to file an application for non-cooperation and get the appropriate orders. At least from then on, we can see that there will be a change in the attitude of the management to provide the information. You can go to the other slide. See, after we receive the information, then again we need to collect the records, information, and then sifting of the information. We have to sift the information, and whatever is relevant, whatever is required for us, we need to do the sifting process thoroughly, and then again take a prima facie view. Then again, after going through the especially the debtors, creditors, cash, bank balance, then again moving of the assets, P&L account. So once it is sifted properly, I think the IPs can take a prima facie view of potentially vulnerable transactions. So these transactions can be again classified in case if on the prima facie view, if the insolvency professional, that is IRP or RP, feels that prima facie view, they while forming an opinion, that is after gathering the information, if they see that there are potentially vulnerable transactions, it is better immediately you appoint a professional who will help in forming the opinion or determining. See, basically, again, when we file the application or when we are doing anything to like reporting to NCLT or placing before COC, it is again primarily, see, the professionals appointed will only their report is only to support you. So when we are filing application, it will be mentioned that RP has formed an opinion. RP has determined the on these transactions and classified them as a suppose preferential or undervalued or fraudulent. Then this application is moved, because again you can rely and the professional's report can be a support, but nevertheless, even COC also has no role on the avoidance transactions. It is only the insolvency professional, that is IRP, RP or liquidator. They have complete control locus standi on the avoidance transactions, performing opinion, determining opinion, filing application. See, while finalizing the transaction audit report, in case if RP has any queries or any confirmations on any transactions, even the transaction auditor feels if they want some clarifications from any third parties or creditors, that time their views can be considered. But again, the filing of the application and um, forming opinion, determining and filing application is completely the role of IP. So here we should not take any, just 1 minute, sorry. Give me a minute. Sorry. So can you go back to other slides, Jani? So RP has to form the opinion. RP has to form the opinion and file the application with the NCLT. And so we are just, I'm just explaining the process to be followed. One is we have to collect the records, information, collect them, then sift through, then we should have a prima facie view on the transactions, then again shortlisting potentially vulnerable transactions. While collating records, what I can just practically explain is, in case GST returns are available, we can take the GSTR 1, 2A, 2B. Then one is again go through the CARO report, income tax audit reports, audit reports. These can be basis upon which we can come to some prima facie view on these applications. And also about the related party transaction disclosures. So this is also one of the reports which the IP has to review. Director's report. So once we form the prima facie view, it is shortlisting what are the vulnerable transactions and see whether. And one more important practically I can say is, you have to classify properly what transactions fall under preferential, what fall under undervalued, fraudulent, extortionate, because application with NCLT has to be filed separately. These are many cases where NCLTs, NCLATs have dismissed the applications because all the transaction applications are filed in one IA. So always don't make mistake of filing application for, in case if you identify a preferential transaction as well as a fraudulent transaction, don't file one application for both the transactions. Suggest you should file a application, separate application, separate IS for each transaction, each category of transactions. So after classifying, then one practical tip I have given, that you have to file a separate application. Then suppose if RP has formed an opinion and determined there are potential transactions, you can take approval of, you can appoint a forensic or transaction auditor. Then audit findings will help you. Actually, you can just discuss with COC there are transactions, but there is no necessity of taking any kind of opinion from COC. It is only supportive, not they are supporting you, but they are no way responsible like in the other processes, in the other functions, like taking control or while resolution plan. All those COC has stand, but in avoidance transactions, it is purely IP. Even COC banks also know this. They will not much interfere with the IP in this role. Then communication with concerned parties. And one important thing here is, while you are finalizing the audit findings, it is always better to communicate with the concerned parties. Like you have the directors, management, against whom you are trying to file, get the transactions identified for the preferential, undervalued, or these avoidance transactions. So in case if there is any transaction which is against one director, you have to seek their opinion. Better you give some their notice and call for their views on that. See, this transaction, can you explain what has happened, background? Because sometimes on the face of it, it will look like avoidance transaction. But once you go back and understand the main purpose for which this transaction is executed, it will be different. See, in one of our case, what has happened, the company has transferred the cars into the respective employees' accounts who were again in the top management. So they were not giving benefit to other employees, but only to the top management. What they have done is the premium class cars, they have given it to the employees at the depreciation value. And the transaction auditor has identified this as a preferential transaction because they gave preference over one employee. But when we went and did the further diligence, there was an HR policy for this. There was an HR policy, and as per that policy, these benefits were given only to the top management. So if you see, there is a policy, and as per that policy, they have done this. So even if you classify this as a preferential transaction and file an IA, then bench takes this as a different view. In one of our case, this has happened. The transaction auditor classified the car transfer to the employee, senior employee, as a preferential transaction, but bench took a lenient view and they said this is all common in common corporate practices. They will give these depreciated assets, cars, to the top employees. Yeah. Can you go to the other slide? Janvi, I'm unable to view the slide. Can you share it? Am I audible, Janvi?
Yes, ma'am. Yes, ma'am.
Yes, ma'am.
Okay. You are able to share, the participants are able to see the PPT? Janvi, are you able to see the PPT? I am unable to see the PPT.
Ma'am, I'm sharing the PPT already.
Okay, I am unable to see the PPT. That's why.
Okay, just a minute. I'll reshare it.
So far, any queries, sir, or any questions from any one of you? Ma'am, from the participants?
Hi, ma'am. Actually, I have one query.
Yes, sir.
In one of my CIRP, what happens? Bank has filed a claim of 4 crore approximately, and
Okay.
he was the 100% financial creditor.
Okay.
And at that point of time, I formed an opinion that there is no fraudulent transaction, or there are no such transaction which can fall under these 4 categories, PUFE transactions.
Okay.
Now the officers in the bank have changed, and now they are suggesting me to conduct forensic audit of the CD after about 2 years. Then,
Uh,
then I just want to seek your opinion on this.
Sir, actually, what kind of transactions they are referring to? What kind of, see, they will have some kind of apprehension or some transactions because they were dealing with CD. Like
Mhm.
one of our case, where a, partner from Belgium, she's into one of the poultry CD. There was some stock statements which the director has submitted to the bank. And once we have done the audit, there is a significant difference in that stock. So now, actually, during the process, she has completed transaction audit. But now, once again, we are going for forensic audit because there is a basis, because there should be some basis. Um,
Okay, okay. I got your point. I just, as per your opinion, in my opinion, they might be seeing if there are any funds that has been siphoned off by the CD or the management.
hmm,
But as such, as per my opinion, that has been formed, and I have seen the documents or whatever available with me on the books of accounts. But there is no such things. But as you have said, in the another meeting, in the physical meeting with the bank officials, I just need to counter them with the what kind of opinion they have formed, like what apprehensions they have in their mind or in their books. Am I right?
true. You are right, sir. Absolutely right. You can talk to them and ask them if they have any basis. Let them give, because see here in our case, there were stock statements which were used by the auditor during statutory audit, and there was a difference, huge difference. So like that,
Right,
there should be basis. You should have
right, ma'am. Right,
basis.
ma'am.
Yes, sir.
I absolutely got your point. Thank you very much for your opinion, ma'am. Thank you. Thank you.
You're welcome, sir. So we have the remedies for avoidance transaction also. So once the application is filed, then based on the forensic audit and filing the opinion, and sometimes you have to take opinion also from the consultants wherever there is no expertise from by the IP. Then we have to file an application with NCLT. And sometimes what happens, this settlement mechanism is again after filing this we can discuss little later. Because see what has happens, once the application is filed, then again, in our case, I filed PUFE transactions IA. One is preferential and two preferential applications and one fraudulent application I have filed. And the resolution plan, see, after the amendment, how the proceeds of PUFE transactions, because the PUFE transaction adjudication takes a time. even after resolution plan approval also, it takes 1 to 2 years to adjudicate and to get a concrete order. So once that has to be implemented, majority of the creditors won't be interested to pursue these applications because they know that the percentage of successful orders in this PUFE is very less. So what they are trying to do is, nowadays the concept of this NRRA, not readily realizable assets, and they are trying to assign this PUFE IA to some buyer and they will sell. And majority of the times the respondents, that is promoters or the whoever against whom this application is filed, through the back door, they try to buy these PUFE. And that's how these PUFE IAs are closed at the NCLT level. And this is one kind of post application, before the order. Sometimes the settlement mechanism is worked out in avoidance transactions. Majority of the times it is through NRRA or the backdoor entry, the PUFE IAs are bought. So, sir, here,
I have a one query.
yes, sir.
In few of the PUFE cases, it has been observed that promoters are not appearing, and at the end of the day, RP is frustrated, and the application is not carried forward, and then people are going for a winding up. They are using this mechanism for under Section 10 application as well. If you have some idea on that, if you can just throw some light on that.
So, you mean to say this, the corporate debtor by themselves, they'll file Section 10 application and get this admitted into CIRP and then clean up things and go for winding up.
Yeah, they do normally a PUFE applications as well, but
Mm.
no none appear from the promoters, and one place of time as a IRP you need to curb the cost as well. So on the light of curbing the cost, CRP is admitted, and then they go for a winding up and they close the company.
Sir, I agree, sir. There are a lot of cases which are filed under Section 10. They just want to clean up. In one of our case, same thing has happened. There was PF dues. So PF didn't leave, sir. They chased for 1.5 year in NCLT. Then we said one of our partner was IP for that. Then we said, see, company doesn't have any funds. So now you have to go
Correct.
the directors. In fact, we helped the PF authorities to go behind the directors. Although we were appointed by the directors under Section 10.
Thank you.
Yeah. So even the bankers, while writing off, they must carefully assess which dates to write off, considering the uh, future avoidance transaction in case if the company gets into CIRP. Yeah, you can go next. So as we have been discussing, the code has cast greater duty on IP. Wherever all other during the process, you have support like valuers are there, COC is there. But when it comes to avoidance transactions, you are single. You have to take decision on filing the application, and IBPA, COC, NCLT. They will see you as an independent person where duty is only on you. Even when you say that you have relied on transaction audit report and all, bench won't agree. IBBI also will not take it in a very good spirit. Everything IP is responsible relating to the avoidance transactions. So we have to be very careful. But what I find is practically we have been given that 180 plus 90 days. If CD is a going concern, running the going concern, then again managing the claims, the creditors, the other stakeholders, then again getting an EOI, preparing IM, process documents, then in case if non-cooperation continues. So lot of things, including compliances with IBBI, filing applications with NCLT. In the process, usually many of the stakeholders also file IA, litigations are there, And in case if there is an ED attachment or any notices come, there are a lot of things IP has to see, comply within that period. Then again, this important duty on PUFE transactions, also there is a time limit. So everything meticulously with the timelines, that chart, we have to ensure that we are progressing on everything within the timelines. We have to fix that every day mails have to go. In case if there is non-cooperation, every day you have to send mail. And regarding the PUFE transactions, every day something or the other we have to attempt. So for detecting PUFE transactions, it is not easy. You have to go and see all the transactions and try to understand how the transactions are done. So why detection of PUFE transaction is important is, again, when we see the recent Bhushan Steel case, Supreme Court has seriously taken a view that RP has not filed the PUFE transactions within the timelines. So we'll discuss the Bhushan Steel in detail with respect to the avoidance transactions. So detecting and filing the PUFE transactions. When we are also, there is a specified form in IBBA, that is CRP6, you have to file in case if you are filing an application for PUFE. So what I suggest is, usually as a best practice, what we used to do is within 135 days, we used to file a form. That as on that we have not filed any application, we have not determined. But however, once we file an application, then again we are modifying that form. But again we end up paying fees, that is 590 rupees per month. So why detecting PUFE transaction is important is, it helps the uncover unfair practices that have caused for the insolvency and bankruptcy of the corporate debtor. And this ensures the rights of the creditors to get back what, if unequally placed, equally placed creditors are given preference over one creditor over the other, then detection of this will keep all other creditors in the same equally placed. Then identifying PUFE transactions allows the liquidation estate to recover the assets that were wrongly transferred or undervalued. Liquidator can bring back all this through recovery into the liquidation estate. In case if there is an order during the CIRP for the PUFE transactions, then if the company goes into liquidation, then these will come into the liquidation estate. Then detecting fraudulent transactions help prevent the fraudulent activities. That is whatever misappropriated fraudulently, the benefits are of the CD are given to the other stakeholders. All this recovery will help getting back the value to the creditors. So once PUFE transactions are detected and applications are filed, then the stakeholder trust will um, uh, we can maintain stakeholder trust. See, suppose in our CRP cases, whenever we go to COC and say there are PUFE transactions, they will be very happy because they have to report to RBI on some formats on the transactions regarding the preferential undervalued. And mostly banks usually they will follow up on resolution, and also they will start after 4 5 months, they will start asking RP about is there anything progress on PUFE transactions, because they also know that these some of the companies which go into stress, there is majorly possible PUFE transactions. So they want this for their reporting purposes. Because the recovering the assets from PUFE is again potentially they'll increase the funds available to the creditors. Yeah, you can go to the bills. So the role of IP in the avoidance transaction is we have to analyze the financial statements. That is, I just summarized in my beginning of this session that we have to read and interpret the balance sheets, P&L, assessing the company's health, then equity, P&L account, income and expenses, and also trends, how there has been trend. What is the kind of trend happened? In our case, the company was running excellently well until there was an issue from the ED. And the company was running, all the banks started, they stopped issuing the BG facilities to the company. The company has no land bank or no hard assets. It was only based on the projects they were running very well. They were into citizen, they are into citizen services. So their entire the CD was a going concern because the banks were giving the BG facilities because of which they were running the process. Once the ED, they were running the business successfully. Once the ED issue has come, there were banks had lost the confidence and they stopped giving the BG facilities to the company. After that, there is a huge downtrend in the revenue because majority of the projects they have to continue giving the BG, or sometimes the BG expired, they didn't renew, and the company was supposed to, company had a great credibility for one project which was close to 2 to 300 crores revenue generating project, but because of ED issue the company had not completed their audit of the financial statements because the two shareholders were ICICI Bank and one more bank. So both the banks were not attending the EGM. They were not voting for the appointment of auditor, financials. None of the auditors in the market were coming forward to audit their financials. So they couldn't bid for that, because of which company lost huge tenders. So while interpreting balance sheets, we should be very careful considering the other issues which may affect the company's health. So these kind of things we will come to know only when we start. See, reading, interpreting balance sheets alone is not sufficient. You have to get into the kind of facts why the company went into stress. There could be some, as I explained, there could be some kind of background which has, which is which are the factors which led to the stress in the company. Then identifying unusual entries or inconsistencies. So unusual entries like transaction reversals, unexplained write-offs, so they require further scrutiny. See, on the face of it, if you see there is huge write-off, you cannot say that it squarely falls under preferential transaction. Because I'll give one example. I'll give two examples. One is in our case, the CD had group companies, close to 15 group companies. They were all running very well up to 2021 before ED issue. One of the call center facility was used by the CD. Although the lease agreement and all the facilities of the call center was in the name of the other group company, but the facility was partly used by CD and the furniture and fixtures belonged to the CD. Those furniture and fixtures were in the books of accounts of CD. So what they have done is, for the rent dues of that call center company, the CD assets were appropriated against the dues of the call center. So that was an unexplained write-off. They were showing that the company furnitures were written off. But when you come to see, when you see on the face of it, it looks like an unexplained write-off. because the assets were in the premises, but did that property lease is in the name of the CD? It was not in the name of the CD. So the forensic auditor has classified this as a preferential transaction. They gave preference over other creditors for the furniture takeover from the other group company dues for the other due company, other for the dues of the other company. So like this, a lot of entries in the books, you find lot of inconsistencies in the books. So we have to go very detailedly into the, not only on the numbers, but also we need to go into the facts and also seek explanations regarding this. And in one more case, there was a huge tender from one of the very big vendors like BSNL. Then this was all pre 2017-16 and all. So there was huge tenders from the government, which the CD was having a sub vendor agreements. So the vendors were big companies of government undertakings, and the CD was the sub vendor. And as I explained, the banks were not giving the BG facilities to the corporate debtor. In fact, they were not giving the BG support to the vendor. Because of that, the company lost huge contracts, which were in the process. So what the management did is they have written off the receivables from some projects. So here there were 4 or 5 projects where the management has written off the receivables. If we go very detailedly into the project, some of them were not bad debts. The company can recover them by pursuing litigation because part of the projects were completed. So you have to refer the terms again. What are the terms with that? What are the terms with that vendor and how much work is completed? We have to go very detailed. So on the face of it, some transactions may appear they will squarely fall under PUFE, but by going deeper understanding of the transaction or understanding through a scrutiny, we can form an opinion or we can determine whether it is a PUFE or no. For this, we can take help of a forensic or transaction auditor. Also, analyzing the ratios will also indicate the stress indicators. And this also one example I can give, the siphoning of funds. In the financials or tally data, whatever we see, the transactions, there is a huge, there is a high chances of diversion of funds, siphoning of funds. Creditors will give, they will sanction the limits for some specific purpose. But what happens? CD will diversify and they will use it for non-sanctioned purposes. So sometimes the bankers also, while taking the certificates on the purpose which the loans are given, those certificates also see the CD could have used these for non-sanctioned purposes. So all these, if you go very detailed into the financials, or sometimes you will get the reports from the bankers, these all can be basis for the arriving at diversion or siphoning of funds. And sometimes they will transfer to subsidiary companies. In our case also, the company had 10 verticals in that financial sector, HR, call center. They were into a lot of things. So what they did is they used to take help of this HR company to recruit into the other company where there was a huge requirement of trainees. They were running call centers or they were running some citizenship services like back office support to banks on the products. So what they did is this HR company, through HR company, they used to route funds to the CD. And from CD, they used to route to the other group companies. These are all very, very, very tricky and very risky transactions where IP has to spend a lot of time analyzing the transactions, whether these are diversion of funds or for siphoning of funds. And in one of in our case only, the holding company, they were a DP and broking house. So they used to hold shares in the name of the shares held by the security holders, and in some cases where there is no activity, the company, this was all way back very long. So the company has used these securities and they have taken loan against these securities. They have given this as a collateral to banks and they have acquired thousands of crores, hundreds of crores of rupees from various banks. And these are diversified into group companies for various purposes. So understanding the dynamics of the transaction is very, very critical. Because again, we file application in case the promoters or the directors management file a counter, then it should not be something new fact to the IP. So we should go very detailed depth into the transaction. So if we see overview and evolution of avoidance transactions in IBC, these transactions were through BLRC, these transactions, the context comes from there. The avoidance transactions are introduced to prevent asset stripping and protect creditors by reversing unfairly benefited to the selected parties. So the PUFE transactions, the evolution of the various transactions, how the preferential, undervalued, fraudulent, extortionate transactions are to be dealt. This is done through various amendments, and lot of case laws are also there on this, where how to determine a avoidance transaction is very detailedly dealt by Supreme Court in Anuj Jain case. So we'll discuss that in detail. So there is a jurisprudence on the PUFE which has evolved on the avoidance transactions, which has evolved through amendments and also through various case laws, judgments. There was also a lot of confusion on the PUFE transactions, how it has to be dealt, who will take the benefit of this. So by amendment, IBPI has clarified that when the resolution plan is getting approved, the mandatory requirement is how the PUFE application will be dealt post approval of the plan, who will be the beneficiary of the proceeds of these funds after recovery, after clawback, the whatever proceeds which are whatever the proceeds which are clawed back through these PUFE applications, how it has to be distributed, who will be the beneficiary. All these amendments are made it very clear by IBBI. And lot of case laws are evolved, and through which we can take some stand how to determine the transactions. But however, it is again, it depends on CD to CD and the sector to sector. Even while analyzing the avoidance transactions, when the CD, we have to understand the basic business of that CD to get into the analyzing to analyze exactly whether the transaction squarely falls into the PUFE transaction.
Ma'am, slide not moving.
Okay. Yeah. Jani, can we go to the other slide?
I'm already on slide 2, which you are explaining.
Okay. You can go to the other. So this we have completed. So these are the sections from 43 to 51 where the preferential transactions, what is the relevant time, how the orders in case of preferential transactions are given, avoidance of undervalued transactions, relevant period, then application by creditor in case of undervalued transactions. So here one section 47. Can you, I'll just take section 47 once.
Application by creditor.
Yes, yes. This is one I just wanted to discuss about the section 47. So section 47 is the application by creditor in case of undervalued transactions. So this is the only section where for an undervalued transaction has taken place and the liquidator or the RP, as the case may be, has not reported to the adjudicating authority, a creditor, member, or a partner of a corporate debtor may make an application to the adjudicating authority to declare such transactions as void and reverse their effect in accordance with this chapter. So here what they are saying is this gives an exclusive right to the creditor where an undervalued transaction has taken place and the liquidator or RP has not reported. So as here the creditor can make or a partner of the corporate debtor. So sir, earlier sir was asking a query whether the creditor is asking sir to go for a forensic audit. Sir, in such case, if there is an undervalued transaction, in that case, if you are not filing, then the creditor can file.
Excuse me.
Yes.
Yeah, in 47, creditors can file when there is an undervalued transaction.
Yes.
Definitely, it might have been done by the CD for his own benefit. He will
Yes.
not do it for the benefit of somebody else. So
Yes.
why he will file? If I have done something wrong for my own benefit and that has gone undetected by the RP has not done anything, why I will go against myself? Do you
Sir,
feel any kind of such situation that person will do it against himself?
sir, this is not RP, sir. This is application by creditor. Creditor can file.
Yeah, that is what I'm saying. So creditor, if creditor has done, which creditor?
Sir, this
Financial creditor?
has done.
Which creditor?
No, any creditor of the company can do.
If it is not reported or not done by the IP.
RP liquidator. Yes.
Yes. So will it not go against the RP that he failed to detect it? He failed to do it?
Sir, these kind of situations, I don't think any application is there as of now.
Because I just want to know the relevance of this.
So,
And there is a timeline also. If he failed to do it, you just said it in case of CIRP or the liquidation, there is a timeline.
yes.
So
There is.
if it could not be done within 2 years, then there is relevance in the liquidation.
Sir, once RP becomes punctus officio, he has no locus standing on the PUFE applications. And also, the substitute application will be filed and financial creditors will take up these applications. So, even if RP has missed in the CRP process, there is no reverse on the RP because he has formed an opinion and determined. In case any transaction is missed out, I don't think any such for missing out on any transaction. If creditor makes an application, I don't see any kind of issue.
Okay.
Yeah. So here undervalue transaction is done by CD. The transaction is done by CD and it is lost to the creditors. Okay. Then undervalue the orders, how the adjudication happens and how the applications are adjudicated. So these are all sections where we can find the how the PUFE transactions are adjudicated. Yeah, you can go to the other slide. So we have discussed the look back period. So there is a look back period. We have to see the transactions. Suppose RP determines that there are some transactions in some look back period. Again, see, this look back period is taken very, the NCLTs, the honorable NCLTs, AAs will adjudicate based on the look back period. Sometimes the transactions are taken at 3 years or 4 years prior. Then in that case, NCLTs are not giving any orders for the clawback of this avoidance transaction proceeds. The
What? Can you please repeat it?
See, the look back period is very important for the prejudicial, undervalued, and extortionate transaction. For unrelated parties, it is 2 years. So, if there are any transactions which are falling under PUFE prior to 3 years or 4 years, then we are not getting any favorable orders for clawing back these avoidance proceeds.
Okay, here in the slide, in the first number, or for any fraudulent purpose.
Sir,
That so in case of fraud, fraud is a fraud, and fraud comes under the IPC. And for fraudulent transaction or for fraud, there is no time limit. I
Yes.
discussed with many of the people, and everybody is of the opinion that there is no time limit. It can, even if after completion of this, you can see this just now. It was Bhushan Steel. Oh, sorry, yes, in that case also it was. If there is an intention to defraud, or there is a fraudulent transaction with the intention of fraud, even there is no time limit for that.
You are
Even
absolutely
after plan also, if you find or court find or anybody find that there was a fraud played out, it can go. So there is no time limit for that. For other transaction, yes, there is a time limit, I think 2 years.
You are absolutely right, sir. I agree. Because once a fraud is always a fraud. So fraud, there is no look back period. For fraudulent transactions, application can be moved
So
anytime.
it is except fraudulent transaction. For others, there is a look back period.
Yes, sir. You are right. You are right, sir.
Thank you.
Yes, sir. And the unilateral legislative guide on insolvency also acknowledged examining the transactions with related parties with greater scrutiny for identifying the avoidance transactions. So here, the legislative guide has recommended looking at longer period for transactions with related parties, because the BLRC and the legislative guides are recommending longer look back periods for related party transactions. Yeah, you can go to the next. Can you go to the other slide? Yeah, we have completed this. So here, if we see section 43 of IBC, the transaction which the CDA has done, it should have the ingredients, these 2-3 ingredients, which are also held by Anuj Jain in Supreme Court case. That is, there is a transfer of property or an interest of the corporate debtor for the benefit of a creditor or a surety or a guarantor for an antecedent financial debt, or also for any other liabilities owed by corporate debtor. And that transfer has affected putting that creditor or surety or guarantor in a better position than the other creditors. They are put in a beneficial position by giving preference to them. And that transfer has put the other creditors in a not in a beneficial position. And that transaction, these are the ingredients to fall as a preferential transaction, that the transfer of property or the interest of a corporate debtor is given to a creditor, surety or a guarantor for any previous debt or any liabilities, or the transfer has effect putting the other creditors in a benefit, the creditor who is getting the benefit in a beneficial position. But there is an exception. That exception is the transfer was made in the ordinary course of business or for the financial normal course of financial affairs of the corporate debtor or the transferee. And such transfer creates a security interest in the property acquired by the corporate debtor and also secures new value. Here it is securing a new value after this transaction. And that transfer was registered with a information utility within 30 days after corporate debtor receives the possession of such property. So the same ingredients of section 43, that the some properties or some interest has transferred for the benefit of one corporate debtor or some surety or guarantor. Here, what is I can give one practical example. In one of our case, the company has got allotment of land from the AP AIC, that is some industrial authority from where they got the land allotment for some specific purpose. And for that purpose, the bank has given this land as a mortgage to one bank. But again, while taking loan from another bank, they have given this same land to another bank for a security. So here, one bank, first bank to whom this security was given, they were having the primary security over this land. Then the second bank had a second charge on this property. But what happened during this course of time, the company has not used for that specific purpose for which this land was allotted. Then this land, the bank has already lent given the facilities to the bank, to the CD. And then one bank the CD has put this land for sale. Before the authority who granted this loan, this land has put this, they were forfeiting their rights from the using this land. So many issues and interlinkages between the banks. There was issue and notices were sent, and then APIIC were also sending the notices to the company. Then when it came for invocation, that time one of the bank, they went against this company under SURFACE. So all these transactions are sieved by the transaction auditor, and one of the bank has declared in their books this company as fraud. And the company which went for invocation against this company, they have not declared them as willful the fraud. They have only declared them as willful defaulter. So this entire gamut of things, one of the banks, the second bank, the transaction auditor has given observation that the second bank had the RP has to go against the second bank for the preferential transaction. Because here the other creditor is put in a beneficial position. And again, this look back period we have covered, that is 2 years from the ICD related to with related parties. So who has the uniquely influential position to undertake a preferential transaction. So you can go to the other slide. So undervalued transactions. Here the concept of undervalued transaction under section 45 is the transactions will be entered by the corporate debtor with an intention of causing wrongful gain to its related parties at the expense of other stakeholders. Where the corporate debtor who is in need of cash may sell assets quickly at a price significantly below the real value. So here, again, it depends from CD to CD, how you have to assess the facts. But here, majority of the time, the promoters will try to justify that they have sold this because they had some other urgent requirement in the project. In our case also same thing, the promoter has one part of the asset of the corporate debtor just before the CIRP, but he said there was a huge policy, there was a policy change from government because of which their production at other unit was getting affected, because of which he has sold this asset at a less value. So these transactions again, see, on the face of it, we can assess whether these transactions fall squarely under avoidance transactions. But again, we have to get into the facts and understand the context of that transaction. Then some of the best practices which we can do is we have to identify the red alerts in the company. By going through the financials, if we see that there was frequent related party transactions or excessively unusual related party transactions have taken place, or sudden disposal of transfer of assets have taken place, or overvaluation, undervaluation of the assets are done. Then sometimes contractual terms, backdated agreements, or to cover up some transactions, they will try to create some agreements or unusual contractual terms. So even these are all very, very important to the IP to understand the contractual terms of the CD with other vendors, creditors, debtors. So this is very important if in case if IP has a IP determines whether the transaction is avoidance transaction, you have to see the contractual terms regarding the transaction. In case any contractual terms are, definitely contractual terms will be there. We have to see the agreements and contractual terms. In our case also, for the write-offs of the huge projects, we have gone through very detailedly the contractual terms with that vendor. So we can file in case if you see any unusual contracts or recovery from any parties, immediately RP can take it up. RP can file a recovery of that from any vendors also in case. Lot of things unearthed when we get into deeply into the company's information documents when we are analyzing. Then again, stock statements. In as I said in one of our partners' case, same thing happened. So when you go through the stock statements of the banks and also the tally data or the books, then you will understand if there is any deviation. Then we can go further deep into that transactions. So these are the some of the early warning signals, red signals, which were issued by various authorities like RBI or a lot of cases where we have collated like default in undisputed payment to statutory bodies, which are declared in annual report. Suppose if you see in annual report, some companies are not paying the statutory dues, then bouncing of high value checks, frequent changes in the scope of project scopes, delays in payment of outstanding dues, frequent invocation of BGs, underinsured, overinsured, invoices lacking the TAN number, statutory details, then disputes on title collaterals, funds from other banks used to liquidate existing loans. This is not usually routine. Unless it is routine, that is fine. Then funding of interest by sanctioning additional facilities. By sometimes they will take facilities to pay the interest. Increase in fixed assets without matching the long-term funding, increase in borrowings despite high cash balances, substantial related parties as we discussed earlier. Then poor disclosure of adverse information, lack of auditor qualification. The compliances are also very, very critical. We have to see whether the company is really compliant. In case if the company is not taking up their compliances properly, there are non-compliances, that is also one of the red signal. Then resignation of key managerial person regularly. These are just some random from various sources we have collected. Then mostly IPs take support from the forensic auditor or transaction auditor in determining these avoidance transactions. So here, appointing transaction auditor, forensic auditor is purely the prerogative of the IP, RP or liquidator. So only for the approval of the cost, you have to go to the COC. So basically the forensic auditors are they have very expertise in the detecting the fraud traces of found. They do the cash trial. Then they use various techniques in tracing the transactions. They go through the bank statements, documentation, transaction flows. Then even they go through the supporting documents and they come out with their findings. Usually, the forensic auditors work closely with the RP and also majority of the times with the RP only. But they also uh, sometimes they seek clarifications from the directors, management, or soil management, auditors, statutory auditors, or sometimes bankers. So RP can facilitate all this for getting a concrete transaction audit. Filing of applications, we complete transactions, then again application has to be filed immediately with AA. Then timelines are prescribed. Once you file the application, you have to file respective forms with IBBA, and also uh, you have to file all the supporting documents basis which you have determined jurisdiction of CD. That is where the bench admits the application through an IA. But again, one more important thing I want all of you to remember: each category of transaction file a separate application. Otherwise, all mixed together, if we file an application, the entire, even if there are merits in some transactions, the bench will dispose without hearing more than 2-3 times. And we have to be very, very clear. We have to, while preparing the application, we have to put the clear synopsis at the starting. What are the transactions for which we are seeking the orders? And once you get, once the resolution plan approval order is passed, or once the CD gets into liquidation, ensure that the respective parties are substituted into this application. Like the beneficiary is the SRA, then SRA has to substitute as a in place of RP, or in place of financial, in case beneficiaries financial creditors, one financial creditor, they will get substituted, or otherwise representative from the FC can decide among FCs, they can decide and have a representative to represent on their behalf as a substitute into this application. Yeah, you can go to that. So here, the one more among all these points in the slide, I have explained what is the duty of IP, how IP will coordinate with the auditors and creditors, valuers to gather the evidence for these transactions, and how he has to report. But very, very, very important thing which IP has to remember is the independence. The IP has to be independent while determining the avoidance transactions. We should not get influenced by either COC, promoters, or anyone. Even if they try to influence, we should be independently determine whether these transactions falls under PUFE. Even if you file application which is not favorable order from AA, even if they don't classify, there is no implication on the IP. Once you file application, that there your role ends. You have to pursue that till the conclusion of CRP or liquidation. Yeah, you can go to the other. Yeah. So this we have discussed, that is reversal of illegal gains. Beneficiaries, whoever get benefited from this, they have to return the gains out of these transactions. The beneficiaries have to restore whatever they got benefit. And there the parties may face civil and criminal prosecutions also because of the PUFE order, the avoidance orders. You can go to other slide. So when we see the PUFE transaction, Jani, can you take this two slides from here? Interlinkage with other laws. So I have my colleague Jani, who is done her PG LLM in IBC. She will take up these two slides. How transactions are interlinked with other laws. Transaction.
Okay, ma'am. So interlinkage with other laws. The first one is Companies Act. In that section 188 to 192 of Companies Act talks about related party rules, in which we see that in if we go through Companies Act, it needs the board approval for the related party transaction in the act. But in IBC, under section 43 and 45, there is no need for board's approval, and the look back period is also 2 years for the related parties. And the undisclosed RPT's related party transaction discovered in CIRP may be voided under IBC while attracting penalties under the Companies Act. So for the look back period, we are limited to 2 years, but for under Companies Act, there is no look back period. We can go for more than 5 years, 6 years, however long year you can go for. Second is fraudulent preference, that is section 328 of Companies Act, where a company has given preference to a person who is one of the creditors of the company or a surety or guarantor for any of the debt or liabilities of the company. The company does anything, suffers anything does which has effect of putting that person into a position. So basically, when we are doing a fraudulent transaction which is affecting the companies, so for in Companies Act, uh, there is no look back period for the fraudulent preference transaction, but in the IBC, in the event of company going into the liquidation, the just a minute. So for Companies Act, when the company is going into the liquidation, that the look back period, the fraudulent preference should be within the 6 month. It should not be prior to 6 month. But if and during the winding up of application, the under the Companies Act, the tribunal has to be satisfied that such transaction is fraudulent preference, and it can think of restoring the position which was earlier. So this is the preference which is given under the Companies Act. And if the tribunal is satisfied that there is a preference transfer of the property or any movable or immovable property, then within the 6 month of winding up of company, the tribunal may order to declare such transaction invalid and restore the current position which was earlier. Third one is fraudulent conduct under the section 447. In this, the provision defines fraud as intentional misrepresentation or concealment to deceive a stakeholder. So under IBC, this transaction involve fraud. Example, asset diversion may trigger both Companies Act prosecution and IBC avoidance proceeding, that is under section 66 and 49. And evidence from IBC forensic auditor can also support MCA investigation into the director misconduct. Second one is Bharatiya Nyaya Sanhita, which is also known as IPC in Indian Penal Code before the name has been changed. So in this section, 318, 336, and 320, which talks about forgery and fraud. So in this section 318 talks about cheating and fraud, which is directly relevant to the avoidance transaction under the IPC. If during the insolvency or resolution process, a party is found to have been deliberately deceived, such conduct can be prosecuted as cheating under this section, and criminal provision will be applied to him for the fraudulent transaction, and under the NCLT, IBC section 66 will be applicable towards him, and it will be like both civil and criminal action for the wrongdoers. Second is section 336, which is talks about forgery. It addresses the making of alteration of any false documents or electronic records with intent to cause damage or support a false claim or commit fraud. In the context of IBC, avoidant transaction is come under play when backdated agreement or any false collateral record, undervalued asset transfer has been involved, and falsified documents have been uncovered. So forensic audit conducted by the RP can identify such forged document which can used as an evidence in NCLT application, and it can lead also to criminal prosecution under the section 336. Third one is section 320 that talks about fraudulent removable or concealment of property. It targets the dishonest of or fraudulent or concealment of property which prevented distribution among the creditor. So this is highly relevant in IBC for in during in the avoidance transaction, where assets are often hidden or transferred to defraud the creditor. So this provision enables criminal action against the person who has attempted to shield the assets from the rightful distribution during the insolvency provision, thus supporting the IBC objective of the maximizing the value for the creditors and determining fraudulent conduct. So both together, these provision can be go along together. Third, we talked about prohibition of Benami Transaction Act, that is section 2 clause 9 of the Benami Transaction Act. In this, when the target property held under the fictitious name, so IBC avoidance application and often uncovered Benami transactions also. Example, assets moved to relative parties uh, pre-insolvency process, and the tax authorities may void these transactions independently, but NCLT orders under section 48 IBC enables the assets clawback. So for the tax penalties and recovery, what happens in that, the during the CIRP, IT department may confiscate the assets, and penalty will be levied over the income under the Income Tax Act, and reversal to through IBC as undervalued transaction can also happen for the Benami properties. Fourth one is Prevention of Money Laundering Act under the PMLA. So under this section 5, it uh, uh, we dealt with section 5. So attachment of proceeds of crime. So in this, what happened, asset which is linked to avoidance transaction, like siphoning fund through undervalued deals, that can be which is attached by the enforcement directorate. So PMLA rights overrides IBC in this, creating conflict. So because PMLA is the public is the act for public benefit, so PMLA overrides IBC in this. So while IBC prioritize the credit recovery, PMLA may seize assets for being crime deprived. And the recent ruling also covers that it since the PMLA is for the benefit of the public, it is for the balance of the interest also, and it overlaps with the section 66 of the IBC, that is fraudulent trading finding under the IBC may trigger PMLA investigation if funds are laundered. So, parallel proceeding for avoidance of transaction in IBC and uh, trans criminal action under the BNS PMLA IT Act can run concurrently. Next, we have dealt with Section 48 of the Transfer Property Act. So, this under this, we talked about where a person purports to create by transfer at different times right in a or over the same immovable property. Such right cannot all or to be exercised to their full extent together. Each later created right shall, in absence of a special contract or reservation binding the earlier transferee, be subject to the rights previously created. So, in this, we talked about the person who has created first time the charge over the transfer of property act. That person only will be liable for the right of the property. Afterward, if the property is given as a charge to bank to another banker, that transaction should be held void. The next one is fraud, that is under section 17 of the Indian Contract Act. So in Contract Act, the fraud definition is given. It means that it means and include any of the following act committed by a party to a contract or with his convenience or by his agent with intent to deceive another party thereto or his agent or to induce him to enter into the contract, the suggestion as a fact of that which is not true by one who does not believe it is to be true, the active concealment of a fact by one having knowledge or belief of the fact, a promise made without any intention of performing it, any other act fitted to deceive, any such act or omission as the law specially declares to be fraudulent. So, in whole act, like in IBC, Benami, there is fraud definition is no has not been given anywhere. Only in the Contract Act it has been given. So we have to interlink it with every laws in if there is fraud is happening. So the definition has been continued here. So what will be the main element which is required to know ki this is the fraud which has happened. So first one is the suggestion as a fact of that which is not true by one who does not believe it to be true. Second is the active concealment of a fact by one having knowledge or belief of the fact. Third is a promise made without any intention of performing it. Fourth is any other act fitted to deceive. And the last one is any such act or omission as the law specially declares to be the fraudulent. So if these if these five elements are fulfilled, or any one of it is fulfilled, then we can declare it is as a fraud, and that will be known as a fraud. Ma'am, now you can take up.
Yeah, thank you, Janvi. So that was an interlinkage with IBC other laws where we were just trying to give some insights from our end while determining the some transactions, how we have to take context from other laws. Then coming to the after determining filing application, it is again NCLT will give how the avoidance transactions process. NCLT orders for restoration, recovery, or reversal. That is again through the orders. Then compliance, the parties have to comply this. Once the order is passed, parties have to comply. Then RP's role in execution of the order. So suppose during CRP or during liquidation, if the order comes, RP has to ensure that the orders are complied, serving a notice to the other party. Then what is the order? As per that order, we have to seek the recovery. How the, suppose in case the party, there is an order from NCLT that the recovery of this money will go to the creditors. Then see, one more practical important point I want to highlight here is the proceeds out of the PUFE recovery. In case multiple creditors are there, that also need to be discussed at the meeting. In case if there is a resolution plan, the SRA has to propose the while discussing, deliberating on the plan itself, POC will decide how they want to distribute these proceeds. Some majority of the times they want to distribute how the plan will distribute. Like sometimes if there is a charge, second charge, first charge, pari passu charge, or they want to distribute this as per the voting rights during the CIRP. This is very important. So in CRP process or liquidation, if this order comes for recovery, the proceed, then RP has to execute based on the decision taken by the creditors, how the proceeds has to be distributed and how the order has to be executed. Once the proceeds are deposited, then it has to be distributed to the creditors and then compliance has to be filed. So usually the outcome and one more update usually bankers take from RP. Even you are a monitoring agency. Suppose after plan approval, the existing RP becomes monitoring agent or any insolvency professional. That time, bankers will ask regularly what is the progress of PUFE transaction, PUFE IA, avoidance IAs. Because majority of the times avoidance applications are not filed in time. Majority of the times, 90%, these IAs are filed just last few months before the CMP. So once the plan is approved during implementation, also banks, the creditors will ask the IP, what is the status? So you should keep track of this. When the financial creditors are pursuing this, sometimes they will ask your from RP also from the monitoring agent also the status of this application. Can you go to? So we were discussing all the transactions, how they will fall under pay transactions, but there are exceptions to these avoidable transactions that usually they parties to whom against the recovery is filed, they will claim this. They have done this in the ordinary course of business. Then what is ordinary course of business? Ordinary course of business is routine transactions and the relevant period. Suppose some transaction has to be done in some relevant period, but it is done in later period. So all these exceptions can be taken. So which are either continued, that relevant period is which are either continued or contemplate to be continued with a profit motive, like deduction of affected by bank from the current account or transaction of sale or flats or properties by real estate developer to non-related party. See, what they will say is, I am selling this to a non-related party, especially in real estate projects. Then creation of new value. So here, any transaction undertaken by corporate debtor, the end result of which is gain for something new. See, the purchase of stock, goods, or charge created on the company's assets to procure a loan. By using the same property, they are creating a new value. Then they will say in good faith or bona fide transfer we have done. In good faith we have done. No intention, no mens rea. So here again the purchaser may be related party, or maybe sometimes it is done even with the related party, they have done at a arm's length price. So all these exceptions you have to consider carefully. So some case laws we want to touch here. I just want to discuss on these are very important. So when we come to the latest case laws, I have few latest case laws which I want to discuss. One is Bhushan Power Steel. So here the IP has ignored avoidance transaction analysis. Here RP has not initiated any action for PUFE transaction. So here what they are saying is the RP, even RBI has issued directions to for the CRP of dirty dozen, that is initially big against big companies. So one of the obligation on RP is that he has to file an application for avoidance transactions. So here, see on the face of it, the Supreme Court has observed that the PUFE transaction is not filed. We are not very sure if we go into the facts of the case, the RP could have determined there are no PUFE transactions. That's why he wouldn't have filed. But however, what we can just for the academic purpose, what we can discuss here is the PUFE transaction IA has to be filed within the timelines. If you are not filing, I think now we have a very good, see, these are all old case. This is the old case. But now currently we have Form CIRP 6. We are filing this because we are, whether we are determining, forming an opinion, there are any transactions or no, we are filing. So we are filing this form. So in that we can be very clear that there are no transactions. Maybe in this case, RP would have determined that there are no transactions. But however, if you conclude on the CRP process, you need to conclude on the avoidance transaction. So you cannot ignore avoidance transaction. You cannot leave it ideally without even see whatever information is available from that information. RP has to form an opinion on the avoidance transaction. So even if you are filing, well and good. If you are not filing also, if there are no transactions also, kindly file all your compliances so that tomorrow you can just and also try to bring this in the COC meetings also. This is one of the important duty cast on IP. Better you can also discuss in the COC that the transactions as an RP you have determined there are no transactions and you are filing necessary compliances with IBBA in this regard. Or otherwise, in going forward, in many cases, what happens initially for few months, you will not be able to determine anything because the facts keep coming, the documents, the data keep coming dynamically in CIRP process. I observed dynamic data, dynamic information keep changing every few days in the CRP, few months also. So today there may not be any transactions, but after some period of time, like I mentioned in one of our partners' case, initially transaction audit was done and RP also determined no such transaction. But after audit, certain things are coming out. After the CD started giving information, dynamic changes, tally data. After all this, now once again, due to stock issues or due to some money trial issues, lot of things are unearthing. And again, once again, forensic audit will be taken up. It will be an addendum. Then again, application can be moved. Yeah, you can move. Next slide. So this is one latest case. This is one of our friends from Bangalore, Harish Addanki versus Anand Kumar in the matter. Right? This is a very classic case where personally I know this IP. Sir is so meticulously worked with closely with the transaction auditor on the money trail and also verified on the related parties. From the tally backup, he could find there are some advances accounts in that to the directors. So he filed an application at NCLT. He was successful in getting an order for recovery of the money from the directors. This is an application where he filed against the 3 directors for reverse of the advances paid to the directors prior to CM. He said he has worked very hard on the money trial, then again bank statements and on the tally data, arriving at these, getting into these advances, how it was given to the directors. So initially in the transaction audit report, he found there are only 2 directors to whom these loans are given. This was to the tune of some 50 lakhs. Then again, he found in tally that there was one more director to whom this was given. That was director's wife. So he again got a supplemental report, transaction audit forensic report. And then again, he added one more additional prayer where he has sought orders against the third party also. He has submitted a lot of bank statements in support of his determination. Then the directors took a technical objection. They said that there are so many disclaimers, exclusions, limitations. So they relied on the disclaimers of the forensic auditor, but they did not dispute of existing the advancing of loans to directors. So here adjudication they passed order for recovery of this money from directors. And they went to NCLAT. NCLAT also gave the same order. And also they went to Supreme Court. Recently, the Supreme Court also upheld the order of NCLT. And the directors are now, they are being advised to pay back to the company. See here, a lot of exercise is required on the data analysis, data collection, data analysis, accounts. Then again, for determining also, the RP can take help of their support team, the professionals, and take help of the other stakeholders. They can. Here, Anamika Singh versus Shinhan Bank. In this case, the loans were given to corporate debtor with exorbitant rates. The interest rates were at different rates for different dates. So they are within period of 2 years prior to insolvency commencement. Here, the RP has filed an application seeking that it was an extortionate transaction where the loans are given at an exorbitant rates. But however, this councils of the respondents, that is directors, they said that they have been done at an extortionate credit transaction and they have to be set aside. But however, here the adjudicating authority held that extortionate transaction, the rate of interest was 65%, which is exorbitant. So in one of the loan, it was exorbitant, for which the loan was given to CD. Hence, this section 50 was applicable. In all of these transactions, I'm sorry, here, one of the transaction was not within the period. In 1, 2, 3, 4, 5, 6, 7 out of 7 or 8 transactions exorbitant, all we got the order for recovery, but again one transaction date was not within the look back period. That is 2 years preceding the insolvency. So for this there was a the order was not passed for recovery. So here, mere book entry, set of related party book entry, then setting of one receivable from the related party. which resulted in transfer of property to its debtors is a preferential transaction. Here, Chetan Shah versus Jayesh Vinod Walia. Here, that repayment of loan to a related party within 2 years towards antecedent debt in preference to others similarly placed lenders. See, there were similar kind of related parties. The transaction was done with a related party, although there were other creditors. The preference was given to a related party, and that repayment of this loan to one creditor by putting the other parties here, the repayment of loan is to the related party, where that related party is put an advantageous position. Because here there were other creditors also, including there was one stressed assets fund who are unsecured and they were also similarly placed. So here the alleged payments were made to the applicant to the tune of 1 crore 15 lakhs is a preferential transaction. Here the book entry has effect of setting one receivable from the related party with the liability of another. Here what has happened is one more. There was a book entry of setting of one receivable from the related party with the liability of another. In one of our group companies also, they have done like this. What they did is receivable from this company, they have set off against the liability of another company and they have paid to a related party, which has resulted in transfer of the bank or cash balance from this company to the other related party, which has put them in an advantageous position. So here, the mere entry of book entry to related party, putting that party in an advantageous position, where the other creditors are also there, irrespective whether secured or unsecured, they have been in the advantageous position. So that has been, there has been an order to pay back. Yeah. Janvi, can you go to other? One important case where we can discuss is about the JP Infratech versus Axis Bank, where Jindal Limited mortgaged its properties as a collateral for loans made by bank and advances made by banks to its holding company, JL. So here corporate data is Jindal India Limited. That company's properties were given as a collateral for the loans of the holding company. So the AA considered as avoidance transactions, but here NCLAT has set aside this decision. But again, the Supreme Court heard this appeal and they made the following ruling. So this is very important ruling where PD has given a preference. They have transferred the property interest to a creditor or guarantor for its financial debt. This transfer has put this creditor or guarantor in a better position. That means for the loans of holding company, they have given their properties, by which they have put their in a beneficial position. That preference was given. The preference has been given and it should be given, it should occur within 2 years. And that too with a related party. Here holding and subsidiary company is a related party. Then again, the Supreme Court has also discussed exceptions in this case. So here, the Supreme Court has concluded the transactions benefited Jindal Group holding company, a related party of CDA, and put Jindal Group holding company in a preferential position, in a better position than the other creditors. Yeah, you can go to others. You can go to, actually it is continued in other slide. You go to this slide, other. Next. Next. So yeah, this is again the same JP Infratech Anuj Jain case. During the CRP or liquidation process, if it is found any business or corporate debtor of a corporate debtor has been carried to defraud the creditors for any fraudulent purposes, here transaction audit report and its contents, relevant tally entries in the books of the corporate debtor were showed payments to related entities, and there was a mismatch in the tally books and bank statements of the corporate debtor. And there was a diversion of money through suspense account through misappropriation of cash and stocks, which squarely attracted the provisions of Section 60. In Anuj Jain case, what has happened is, especially when we take the tally data, tally entries in the books and also with the bank statement, we have to see whether the transactions are matching. If there is any mismatch between the books, tally data and the bank statements, and we see there is a diversion of money through some accounts, this will squarely fall under Section 66, diversion of funds. So here, the applicant, the party who has taken benefit, they were asked to make the total contribution of 100 crores, which was siphoned off. Within 30 days, they have to pay. This was an order in this Anuj Jain. Right. So when we see Anuj Jain case is the landmark in the avoidance transaction, it clearly, very clearly explains, very clearly clarifies the duties and responsibilities of RP regarding the avoidance transaction. So first is we have been discussing that the RP has to sift through all the transactions relating to properties, interest of CD, and that to backward 2 years. Then again, we need to identify the persons involved in the transaction. We need to identify who is the person, related party, management, unrelated party. So all this, then again, if we have a related party definition under Section 524 under IBC. Then after we identify which of the said transactions preceding 2 years, the beneficiary, whether the beneficiary is a related party, unrelated party, because again that 1-2 years timeline is applicable. As I have been discussing, we need to examine each and every transaction regarding whether any interest is transfer of property or interest, beneficial involvement in the transaction, where in the capacity of creditor, should it be or guarantor. Then we need to scrutinize and shortlist all these transactions and whether it is pertaining to the paid towards financial debt or operational debt or any other liability. On these classifications, it's very, very clear, crystal clearly they have established how to go about this transaction. Yeah. So here, a few more points how they have advised the RP, the classic Supreme Court judgment where they said the RP or liquidator IP has to examine the transactions, scan through the transactions, how, and they have to see who is in the beneficial position, and if see how in the who is the beneficial position and how it would be distributed under Section 53. These are all affirmative. Then what are the transactions which do not fall under this category? Then for this, immediately RP has to file an application orders. Once again, the Supreme Court has observed the parameters and also what are the inquiries, how the avoidance transaction has to be dealt with, and how the preferential transaction, the question of intent, and what is the virtue of legal fiction upon the existence of given ingredients of a transaction. So all these we have been discussing right from beginning. These are all important aspects which Supreme has clarified. Janvi, can you go back to the previous cases? Next, please. Yeah. No, after this. Yeah. So yeah, no, previous one. Yeah, here certain transactions appear to be fraudulent or preferential. In PRP of Sana Syntax, the RP filed an application. Here, the CD could not be revived, therefore, liquidation commenced. Here, this is pertaining to the liquidation. So, the adjudicating authority observed that if there is a siphoning of funds, it is important the same to be bought back for the till the completion of liquidation proceedings. Here, where the liquidator or the RP during CRP or liquidation, it can be understood that avoidance or preferential or undervalued transactions can be handled even at the liquidation stage. Sorry. So here, even during liquidation also, the siphoning of funds or any fraud, it can be dealt at liquidation level also. Next case. This is in NCLT Delhi, RP in State Private Limited. This application was filed under section 43 and 66. Differential transaction, there is a look back period of 2 years in case of related and 1 year in case of unrelated. But avoidance transactions, there is no look back period. This is even in NCLT, we have seen this. For section 66, there is no look back period. So here, the preferential transactions of 3.82 crores with related parties of group companies and transfer of money was made to these related parties and there was no justification why the amount was transferred. So even there was a transaction audit report. Hence, in this case, the orders were passed for recovery of this monies to the corporate debtor back. You can go to the next. Yeah. So this is also one of the important cases, Atlantis spinning case, where merely because sale agreement is dated 1989 and sale deed is executed in 2008, it cannot be a ground for establishing as a fraudulent transaction. See what has happened in this case. There was a sale agreement of the land in 1989, but however, sale deed was executed in 2008. So RP went and filed this is a fraudulent transaction. But after going through the supporting evidence, the financial statements were reflecting that towards sale of this, there was an advance paid for 37 lakhs in 1989, as well as there was a bank confirmation letter on receiving of these funds for the sale of the asset. Although sale agreement is in 1989 and sale deed is executed in 2008, cannot be treated as a fraudulent transaction. Classifying the transactions into these buckets of preferential undervalue, fraudulent, extortionate, not only your financial analysis, you need to analyze the facts of each case properly for determining. Then, as we see practically, as an IPs, we face a lot of issues with avoidance transactions also, including when during CRP. There is a stricter timelines even for the PUFE transaction. This is also one of the issue which we face. We are bound by timelines, getting information, determining all these factors have to be considered, and RP has to work swiftly for getting the even during CRP there are various functions who are duty bound and the code is casting the duty on you and timelines are fixed. So meticulously plan on this avoidance transaction. And non-cooperation from management is one of the very critical key issue for which non-cooperation IA can be filed within. I say within 2 months. It is better if we don't get much information. We have to immediately file. Then analysis of data is also very important. And especially regarding if there are group companies, related parties, write-offs, all these are challenges and sector specific issues. And your approach is the most important and key to for forming an opinion, determining on the avoidance transactions, and for filing of application also you need to have a very good counsel, and forensic auditor, transaction auditor also you need to rely on good professionals who can give you a genuine and proper report. These are few just practical experiences I wanted to share. Thank you very much for your patient hearing. So any queries on the presentation or anything related to avoidance transaction, we can discuss.
Thank you very much, ma'am. Thank you very much.
Thank you. So any queries from the participants? Actually, there are many case laws. If we can read the case laws, whatever from NCLT orders, we can classify these transactions. And also, most important is again, the transaction has some background. We need to get into those backgrounds and analyze properly. Thank you, Anjali ma'am.
Yes, ma'am. Shall we conclude?
Yes, ma'am. I have completed, and if there are no queries, can conclude.
Participants, if there are any queries, kindly ask. I think there are no queries, ma'am. Then we can conclude.
Okay. Thank you, ma'am.
Thank you very much, ma'am, for taking out time and taking session on the topic. Role of IP in PUFE transaction. Thank you very much for sharing knowledge and making the session very insightful. Thank you very much, ma'am. Ma'am, please share your PPT. You are shared, I think.
Thank you. Thank you, everyone.
Thank you.